How's everybody doing tonight? How's everybody doing tonight? Okay, what's going on, everybody? Welcome to the Capital Hungry Market Analysis stream. How's everybody doing tonight? One sec here, my phone. Okay, how's everybody doing tonight? Can I get an audio check in the Zoom chat as well as the YouTube chat before we start jumping into any analysis or trade ideas? I'm good. I'm just a little bit under the weather. I was a little bit sick the last couple of days, but it's all good. Yeah. All right, so it's currently 1:40 a.m. Eastern, Thursday morning, February 4th. We are going to be doing some intraday and scalp trade analysis across gold, GJ, GBP USD, EURUSD, USDCAD, and US30, as well as looking at any economic headlines that could impact pairs we are trading overnight to potentially use to our advantage, as well as investor behavior as we look at how money is flowing in or out of the equity markets or into the safe haven currencies, and any economic data we may have overnight. Yeah, GBP NZD yesterday. Yeah, that was a good save there, not to jump in that buy. No worries. That's the whole point of the Zoom chat in the chats, right? If you're like worried about, if you're hesitant about taking a trade on a pair, the whole point of these communities is to have other people you can lean on and say, hey, I'm not feeling 100% confident in executing in this trade, but this is my analysis. What do you guys think? And then that extra bit of feedback, if it's coming from a good source, can potentially save you from losing money or even help you make money or just help you stay out of the market sometimes when it's just best to stay out of the market sometimes, right? So before we jump into it here, for anybody who has questions or is new to the stream, is there volume issues? Can you guys hear me? Usually people say I'm talking too loud. So yeah, I'm a little bit under the weather. If I'm sounding nasally, I'm a little bit under the weather because the Canadian weather's been dog shit, man. And everything's locked down here, so guy can't even go to the gym. But let me know if the volume's okay before I keep talking, because most people say I'm too loud usually. Is it all good? So Delvin, that might just be a singular issue towards just for you, right? Sounds all good. All right. So during the stream, we use various technical and fundamental concepts to map out trade ideas on an intraday and scalp perspective, primarily on gold, GJ, GBP USD, Euro USD, and those pairs that I was talking about. So you can feel free to ask questions, but primarily I like to go through all the analysis in my point of view first through these pairs one by one. So just be patient because I usually start with gold and then go through all the pairs. So if you have any questions or want to ask about a different pair, just save it till after I'm done going through all the analysis. So we can at least understand and have some trade ideas set and then potentially just start looking to execute those trade ideas. There's no direct signals here, no direct financial advice, but if you guys want to contact me, you have all the information there from the Capital Hungry News Twitter, the Capital Hungry Free Telegram channel, and my own Telegram username if you wanted to message me one-on-one. And for anybody else who comes late, because a lot of people join like at actual London session when the moves are already setting up or we might already be in trades, just tell them to rewind this stream and then they can always see the analysis or trade ideas we are looking for, as well as see all this contact information as well, So that's just for the YouTube chat. You'll see those stream reminders there. And I know our primary goal, we like to do analysis and try to make money in the markets. But as traders, we have to focus on protecting our capital and surviving in these markets. And that's only going to come from staying emotionally neutral, following our trading plan, understanding the risk involved in the markets and following our risk management plans, and focusing on the long-term visions and avoiding chasing after short-term satisfaction. All right. So don't forget that little mental reminder. And some of the economic events at 4:30 a.m. Eastern, we have the UK construction PMI. UK PMI has been fairly solid. And another thing we want to understand later on before pre-New York hours is the UK interest rate. So we might see a bit of indecision on GBP pairs overnight. Like it could potentially just range if we don't have any clean breaks of highs or lows. Like obviously we're going to be doing our analysis. So if we don't have any of those clean breaks as per market structure and we just see GJ ranging, then we'll probably see more of an impulsive move during the UK interest rate decision at 7 a.m. Eastern. But a lot of that, in my opinion, is already priced in. And I think they're going to have more of a neutral sentiment, just talking about how some of the downside risks of COVID still remain, but there's still room for financial support and more stimulus for the country if needed. So it's just going to be a fairly neutral statement, similar to what the Feds have been saying and other central banks. So just keep that in mind for the economic events. Some of the key fundamental points: Biden is streamlining the potential votes for the US stimulus. There have been short-term issues regarding vaccine distribution and plans between the EU and UK that are causing these short-term tensions and disruptions between that relationship that could potentially impact Brexit, but that has caused a little bit of short-term negativity. We want to understand that it's still fairly early into the new month, and we've had a lot of central bank speakers over the last week or two talking about their continued financial stimulus support for their correlated countries. So now, when we look at, where's my equities chart? So when we look at our global equities, we can still see that from a macro perspective, investor confidence has still been relatively high. We are starting to get some exhaustion around these previous high points, but overall, stock markets have still been bullish. For example, even though GJ is doing a bit of a pullback from new highs that have been created on the higher time frames, these risk currency against safe haven pairs are still primarily bullish. But because it's still early into the new year and we're starting a new month, we can see that short term, the Japanese yen has failed to break previous lows, and we're noticing the dollar is holding more short-term strength. The VIX has been playing in this range for an extended period of months now, failing to break highs or lows. So that hasn't been telling me too much information. I've primarily been watching the US dollar movement, the active dollar index movement on, let's just say, like the 30-minute chart, as we're watching intraday money movements, because the US dollar is a safe haven currency. So when you see money going into the US dollar during our intraday periods as we're trading, it's telling you that more money is going into the safe haven currencies and coming out of the risk currencies, which is why you could see we've had more of a pullback on like GBP USD from its highs. You're starting to see we're getting more of a pullback as buyers are exiting positions at the GBP USD highs, and that short-term US dollar strength is just giving us that new monthly pullback, which is expected. So for all of you who have been following the streams, you guys understand that I like to view the markets in simple terms such as buyers and seller strength, or that transaction between buyers and seller order flow. So what I mean by that is obviously GU, EURUSD on the higher time frames, GBP USD, GBPJPY has been extremely bullish. But the way the market behaves is when you have buyers running in the market from potential low points, wherever it may be, right? And they are longing GBP against the yen, or just longing GBP overall for that potential investment for whatever XYZ reason, fundamentally and technically, right? Most likely is fundamentally with all of the market optimism and the support of central banks, right? From a institutional perspective, that's why you've had all of these pairs like GU, Euro USD, AUD USD, AUD JPY. It doesn't matter. Ever since March 2020, we had that crash, and then central banks jumped in, and we've had that V-shaped recovery pretty much across the board. Okay, but when these buyers extend to new highs, you can see the way the market behaves as they exit out positions. The only way they can get out of the market and cash out is if the sells jump in on the other side to relieve their order flow. The market works hand in hand between buyers and sellers every single second, every single minute. You can't have one without the other. Just like you can't have a market without winners and losers. You know what I mean? Anyways, so when you have these buy side moves and new highs are created, there's the potential that buyers are going to exit positions. And technically, when we are observing charts and buyers cash out at new highs and sellers jump in, this creates a corrective pullback phase. So that's why over the last week, if you guys have been following the streams, as GJ and GU have been reaching new highs and we've been starting a new month, I've been advising you guys, hey, I'm not saying that GJ or GU is a mass sell-off or on the higher time frame a sell or extremely bearish, but there is the potential for us on the intraday time frames to start playing scalp sells or intraday sell trades because it's entering corrective pullback structure as buyers exit positions. That is the reasoning behind it. And we're getting that short-term US dollar strength, right? So you guys remember that. Hopefully everybody's starting to understand those concepts. Or is that still confusing for everybody? I'm talking to the people who have been watching the streams now over like the last month or two, or everybody in CH private, of course, right? Okay. So this pattern right now, if you zoom out and you look at GJ or you look at Euro USD, this concept, this fundamental concept, because here you have risk currencies, the Euro, GBP, NZD, AUD, CAD, they are considered risk currencies. JPY, US dollar, Swiss franc, they're considered safe haven currencies, okay? Even though it's not exactly the same, you're seeing the same type of idea where you're having these bullish impulsive moves and then corrective phases. The corrective phase is either going to come as a consolidation that doesn't break structure to generate more order flow and liquidity for the next impulsive move, or it's going to come as a pullback, which brings price down to a better demand area for buyers to jump in and then continue up. But as intraday traders or scalp traders, when you can identify what phase price is in, you can start to take advantage of that alongside the fundamentals and technicals. So for example, Euro USD is extremely bullish and has been bullish. You're having impulsive upside moves as markets are optimistic and you have central banks supporting their correlated countries, right? The Euro central bank starts pumping the Euro markets. Bank of England supports GBP, the Feds for the US, et cetera, right? Then you start having investors also longing the euro alongside the central bank support, taking the money that the central banks are giving them down the line from the governments to the corporations and putting that right back in the markets to make even more money on it. This is how like a crisis or any economic downside is taken advantage of by the 1% or how it moves by the central banks, right? This is pure central bank support. And of course, when you have the US dollar, which was so fundamentally oversupplied from that Federal Reserve printing, you have that one-sided fundamental volatility. And here you can see technically you have buyers printing new highs. They cash out positions. This creates a pullback or a consolidation. The structure doesn't get broken. Fundamentally, it's still bullish. We extend to create new highs again. As soon as new highs are created, buyers cash out positions. This creates a pullback phase or a consolidation phase, and then you see the pattern. Now on Euro USD, we're still extremely bullish on the higher time frames, but what we're seeing is we're entering this intraday corrective structure as buyers are exiting positions as Euro has been so bullish since March, right? And then we see this potential previous high getting retested here. But all I'm saying is, if you can understand that transaction between buyers and sellers when buyers are entering the market, when they're potentially exiting, what this starts to print as per the technical charts in front of you, alongside some of the fundamentals. It really paints a picture so you can map out some nice trade ideas, right? But with that being said, what I want to discuss first here on GJ, I'm going to do GJ in these pairs first, then we'll do gold after. Is when we're looking at GJ, we can see that we're starting to enter this corrective lower time frame bearish structure here. Okay? Now, GJ is still very bullish on the higher time frames, but as buyers have printed new highs and the Japanese yen and US dollar pick up short-term strength, we start to enter that corrective stage as they exit positions, right? So now we want to be very careful here, because when you're trading these corrective plays or you're trading the pullbacks, it is still essentially a counter trend trade to the higher time frame bias. For example, these pullbacks are great sell trades to take as like a new high is created. You get the pullbacks with the validation of lower time frame price action and seeing buyers exhaustion at previous highs. But if you're not managing your positions or you're looking to swing those sells and you don't get a break in structure or any fundamental catalyst to cause a mass sell-off, this is essentially what I just said. It's just a pullback to push price down to a better demand area for more buyers to jump in to have enough potential order flow to break those highs. Right? So right now, what stage to sort of identify it is, can we say GJ is in right now? Because to me, it looks like it's in a pullback stage right now or a corrective stage. And I'm seeing buyers that were in from these various lower highs. Sorry, buyers that are in from these various higher lows now starting to cash out positions at these new highs created, right? So we want to watch this very carefully. So essentially, if GJ is to do a pullback overnight and still remain below this lower time frame bearish market structure, I'm still in that potential corrective sell bias to slowly keep creeping down. Now, you may be asking, okay, Jeev, I can see that it's in a pullback phase. I understand that that comes from buyers exiting positions, sellers jumping in hand, the market moves in waves, price coming down to a better demand area. But how do I know when the pullback phase is over? How do I know when buyers are jumping back in? That's when you start identifying it based on the lower time frame price action and market structure. So now when we come to look at GJ on the 1 minute time frame, you can see now, since about the start of the week right here, February 1st, we have been respecting this corrective bearish market structure where primarily sellers are printing lows and we're getting pullback phases or consolidations and lows printed. Even now, we finally broke below 143.200. So how would I validate that buyers are jumping in and this corrective phase is coming to an end? I would need to see a shift in this market structure technically on the lower time frames. The higher risk buys would be if we continue to retest these lows and fail to break and start to create a lower time frame support at 143 flat around the previous lows. Like, see how here GJ pushed down, started to create this support, bounced up, created this and rejected this area again. This is a high risk buy area. You would be in profit 10, 15, 20 pips. But if you don't break the market structure and show that there's more buyers momentum, we're still running in this seller's trend in that pullback corrective structure. So what you would need for the safer buys on GJ and to validate that we're running back with the higher time frame trend is to validate that exhaustion by sellers and failures to break these lows, and then price to come above this bearish market structure to show more buyers momentum technically. But behind the scenes, it's just showing us more buyer order flow coming into the market and running with the higher time frame trend, where once you break out of that corrective phase, it might seem like you missed the move, but remember, your target after that corrective phase, if we were to break out above this structure, you're looking to target back up to the previous highs, just like any of these pullbacks. You have the pullback running bearish market structure, you get a break above the structure and price goes back to previous highs. That's how the pullback. That's how just the market structure and that buyers and sellers transaction works if we don't break the overall higher time frame trend. But right now, with the current price positioning, I'm not saying we can't do it overnight, but have we broken that corrective structure? Like have we had, just to zoom out here and show you guys a better example. When you're looking to the left here, when you see this like at highs, remember this is at highs, right? These are new intraday highs that are being created. And when you go to the lower time frames, this is the lower time frame bearish market structure that you can identify, right? Even if it's very small and minor. Now, when you're looking at these new highs printed in the current price positioning and corrective structure, have we had that bounce and exhaustion from previous lows and that shift in structure, showing us buyers are entering the market again? As of yet, no, right? So right now, we can't start to jump in buys without those proper confirms. We have to continue to play this corrective sell structure because we don't know how big the correction is going to be. That's something we're going to monitor objectively with price action. Understand? The pullback can run 100 pips, or the pullback could go 50 pips at the highs and then have enough buyers in the market. We can't identify that. We don't know how but we can identify, okay, this lower time frame bearish market structure is still being respected. So I'm still looking for potential sells to revisit these previous highs, at least if we're going to have that deeper correction. All right. So now when we come back to the 1 minute time frame here, let me just clean all this yellow marker shit up. Sorry about that. Oh shit, what the hell's going on? Right? So now when we're looking at the 1 minute time frame, I can't be confident in risking any money in the market on a GJ buy unless we were coming above 0.500. But you have to understand, if we were to come above 0.500, we're targeting previous highs, which is pretty much 144 and 60 pips up, right? So it's still a favorable intraday trade if we had all those confirms. We can check off, okay, the corrective stage is coming to an end. We broke this bearish market structure. We're coming above 0.500 PPL. We failed to break these previous lows. And then we can be confident to take those buys with the buyers in the market as we see how GJ behaves, and all pairs or any trading instrument behaves this way with that reaction between buyers and sellers. Nothing just goes up forever. Eventually, those people who are pushing price up, you want to call it the banks, you want to call it the 1%, you want to call it the Illuminati, I don't care. Eventually, they have to cash out. And that cash out is going to create that pullback or that market wave as sellers also jump in hand. That's how hedge funds and banks work together, right? You always have someone on the opposite end to pick up your order. Otherwise, you wouldn't be able to exit out the market. But anyways, so now we're looking at GJ. And GU is going to be also very similar. What I'm primarily looking for at what time is it right now? Pre-London just started right now. I want to see how this hourly candle is opening up. It is German market open right now. And then we have London open in 1 hour. So let's just quickly zoom out here on our intraday time frame on the 30-minute or hourly. All right, so this hourly candle right now, PPL is a psychological price level on GJ specifically. All right, so what I don't like right now is how this hourly candle has already pushed down and has not created much of an upper wick, and we still have actual London open itself. Now, I'm not saying that we can't have candles close without wicks, but usually there is the potential that these intraday candles will create those wicks, but it's looking like we're going to continue down the ranges to possibly retest these previous highs and previous price sensitivity area, as we're still respecting that intraday corrective bearish market structure. Okay, so over London session, primarily what I'm going to be looking for is either if we get that pullback to 143.2 on the hourly candle, this would be higher risk, higher reward sells if we fail to break. If we break above here, then I'm watching for better risk versus reward sells at a retest of that bearish market structure, because GJ in that corrective structure does do these aggressive pullbacks. And we've seen it dip and create these lows and then have very aggressive pullbacks to retest this structure. So if it was to do that again, this would still be a prime sell area for me. Or if you patiently want to wait for the safest sells, you would wait for the London Open pullback to generate liquidity first, price to come down, take out this low, and then you're looking for that next 20 pip range down to the 0.100 PPL. But like I was talking about, and like how somebody is reminding in the YouTube chat, the UK interest rate, when you look at these economic events, is at 7 a.m. Eastern. Okay, so you might have some indecision with GBP pairs overnight, and we do have the UK construction PMI at 4:30 a.m. Eastern. But if we can sneak out a scalp overnight with the London session volume, then why not if we have those confirms there, okay? So this is a very key decision point to me around 143.2. You can also see like how that hourly candle, it pushed down to create that lower wick, and it's rejecting 143 previous lows on the dime right now. We're going to be watching price action accordingly here. If we come up and reject and fail to break higher and remain below, then we're looking for those higher risk versus reward sells, or the safer sells. If we have that pullback first, liquidity generated, and then take out these lows, that's the safer sells, but it's less rewarding, right? If we were to break above 143.200, as GJ does those aggressive pullbacks to retest structure and then continue right back down, we can scalp this play up 25 pips to like retest 0.500 here. But that's something we're going to have to watch very objectively and need the lower time frame price action confirms of a clean break above and either a retest or a support being formed. Because if we remain below, then obviously we're not looking to take advantage of that. So this is a very key decision point that I'm looking at around 143.200. But you guys can see why I'm in that corrective bearish bias for now. You know what I mean? Does that make sense for GJ? Because GU right now, just to quickly summarize, is going to be very similar as per the market structure, probably even a bit more bearish with that US dollar strength, right? So very similar here on GU, where I'm just this bearish market structure I've just been playing. We already had a very clean break and retest. Like this is the bearish market structure from these highs where we started to enter this corrective stage, right? Similar idea here. So we could see that this bearish market structure is still being respected. What would be ideal is London Open pullback. Same idea with sort of what we're looking for on GJ. That retest of structure failed to break or come back below the 36100 level where we just got a nice 1 minute rejection here. And then we're continuing sells. I would only be looking for buys on GU if the US dollar fades out strength overnight, as we're watching the dollar index, because the US dollar is printing new intraday highs as well. But if the dollar was to fade out strength overnight and weaken, and GU is to come above 1.365, then I could say this corrective phase is coming to an end. We're breaking that bearish market structure and coming above a higher time frame historical price point, and there's more potential for us to buy. All right. Jeff, do you want to be put in timeout, or do you want to say sorry because you low-key love me and been watching me for 4 years? So you want to be in a timeout, or do you want to apologize? Because you watch every single night I come on. You set an alarm for when I come on. Thank you. That's what I thought, pussy. You better apologize. Man's like, I don't want to get booted. Oh man. So, anyways, GU. Let me type it out for anybody who's going to be asking bear questions later, man. You know. So let me mute myself so the typing isn't annoying. Though all the white lines are key levels based on historical price points on the yearly, quarterly, and monthly. The red boxes are medium zones on the lower time frames or psychological price levels where you see a strong lower time frame reactions. So GJ, everybody understand the GJ and everybody roast Junior Lawazi right now in the YouTube chat. Who came in and said, "What's the trade with exclamation marks?" Do you think the Super Bowl in the U.S. will have an effect on the markets? No, I don't think so. Yes, or Nalan. That's a good question. If you wanted to watch the dollar index on the minute, and then you wanted to compare like EU on the minute, you would see like similar inverse movements. Not exactly inverse, but you understand. So yeah, that was a good question. Yeah, no worries, Adonis. Thanks. Okay, YouTube chat. Because nowadays, I don't want. I'm just gonna be providing analysis information. All right. So you guys are gonna do the roasting for me. All right. Okay. Before I jump into gold analysis, gold's having a very strong bounce off 1820. Before I jump into gold analysis, let's just quickly check these headlines to see there's nothing major impacting. But what I do like, and I'll show you guys in a minute. All right, let's check the headlines over the last 10 minutes. I'm going to be a quick news anchor for everybody here. I didn't call you anything, bro. I didn't say anything. The chat called you some words. COVID UK vaccine. Minister Zahawi says on report of changing AstraZeneca vaccine. All manufacturers are looking at how they can improve the vaccines for the new variants. How many new variants are there? I heard about a South African variant, a UK variant, a Brazilian variant. Like, what? How many new variants of the coronavirus have you guys heard about? Japan's prime minister not considering dissolving parliament. Japan's prime minister talking about Olympics. You know the Olympics are still going to be going in Japan. Yeah, I'm not roasting anybody till the last 30 minutes of the stream. Yeah, Japan's going crazy with that, right? They really, I think, because it brings in a lot of revenue. You have to understand how much revenue it brings in when you host the Olympics. Because, like, like for example, what Adonis was talking about the Super Bowl impact to the U.S. That's more of like just an American sport, football. You know what I mean? Like American football. But the Olympics is a whole globe with all the two exactly. You know what I mean? So it's the entire world collecting. China admin. Yo, did you guys know this headline that that more people have gotten vaccinated than have actually caught COVID? Like 103 million people had COVID actively, and now like 104 million people have been vaccinated already. It took like a year for 100 million people to get COVID, but it took like 3 months for all these vaccines to come out and everybody to get vaccinated. And 100 million people got vaccinated, right? But there's still headlines about these vaccines going through testing trials. Has anybody been noticing this? There's still headlines about other pharmaceutical companies submitting vaccines. There's still headlines about other pharmaceutical companies still testing vaccines and like, but already 100 million people got vaccinated already. And half the shit, and it's only been like 3 months, 4 months that these vaccines all came out, and they're still not even like fully tested. They're still not even fully approved. They've been approved for emergency use by the FDA in some countries, but not actually like fully approved yet. Just approved for emergency use. It's like a legal way of getting by all the testing. Do you guys understand that? When you approve it for emergency use, it's like a legal way to say we don't have to test it as much as we did before. If they have tested it, if someone said they're testing it and it's safe, he took it yesterday. uh, all right. Any other headlines here? GJ and GU, we understand. No rush, guys. Be patient. Be emotionally neutral. It's only 2:15 in the morning. All right. If it's safe, then why are they still going through testing then? If it's safe, like why is AstraZeneca still going through testing, whatever it's called? Why are they still coming out with like updated versions of their vaccines, or India's coming out with their own? Russia has the Sputnik vaccine. India has a vaccine. Euro has a vaccine. Canada ordered vaccines from the Euro and India company, and Canada's making their own vaccine. Doesn't make any sense, right? Like it doesn't. You get what I'm saying? Like Canada literally spent. It's all just corrupt money movement lining government pockets. Canada spent 500 million on vaccine research in Canada. to end up buying $1 billion worth of doses from another company, and now they're still developing their own. Like all these companies, fam. At one point, Kodak was about to make vaccines. They had to pump and dump with their stock. You know, what AstraZeneca is first inhibitor approved in China for heart failure with reduced ejection fraction in adult patients with, like, they're still going through all these tests, but 100 million people already got vaccinated. You know what I mean? They're still actively going through these tests. North Korea forecast to receive about 2 million doses of the vaccine. Shit's scary, you know? The world's a shit show, man. The world's one big fucking movie. All right, not too many headlines. We're good so far. Yeah, we're good so far. All right. So, who's been on the stream the last few times where we were talking about how we were playing this gold range for an extended period of time, right? You can see that on the 4 hour candle, this 4 hour candle is still going to be active for the next 2 hour and 40 minutes. So I know we're having this pullback, but we haven't closed back in the range yet. And you have to understand the secondary in this is the US dollar, and the dollar index, we're looking at Dixie, is bullish still. All right. So when we zoom in, we're going to notice some lower time frame bearish market structure still being respected on top of our key levels. You can see so far from this impulsive sell move, we had all this liquidity generated at that very strong support level 1836. We had this very strong impulsive sell move of almost 200 pips, and now we're getting roughly a 50% correction of that sell move. I don't know if we're going to get a full retest of this support, because the way I see it is, if we were to get a full retest of 1832, that to me is pretty much a mirror correction, and I can see gold just coming right back into the range. Does that make sense to you guys? Right? If I was to see something like this, see this? See how gold had this very aggressive sell-off where it looked like it was breaking market structure, breaking the lows, and then people here, they're like, oh, look, gold broke the support, now it's retesting it. But they ignore the fact that the higher time frames on gold are very bullish, and the price action that this is a very strong correction, almost a mirror move, right? And price comes right back above the range and then goes up bullish right back in the range. So what I want is, I personally do not want to see gold come all the way back up to 1832, but it can, right? So what I'm looking at on the lower time frame is around this 1828. Like, I would rather have us play around here and like peak up to like 1828 and then have a continuation down, because look at this bearish market structure on the lower time frame that's been respected now since the start of the week with that US dollar strength. Keep in mind the dollar's bullish and this is gold against the dollar, okay? Okay? So you can see the way gold has been behaving is you have this liquidity generated and lows created. Once a low is created, those sellers exit positions and you enter this consolidation or pullback phase. If that consolidation or pullback phase doesn't break market structure, then we're still running to create another low, right? So what we're looking at here is that if we could retest this area and fail to break, this is a high risk, high reward sell area. The safer sells would be to have that pullback and come back below 1820. I'd only be looking for buys above 1836. 1836 is safe buys because we can validate that gold is breaking back into that intraday range, like with that snapback of price action. We can validate that shift in momentum with that break of market structure, and alongside higher probability the dollar would be weaker overnight. So we'd have those confirms of the dollar weakness, of price above a higher time frame key level, back above a current intraday range, and breaking bearish market structure to take safe buys back above 1836. Other than that, I'm primarily waiting for a pullback to this area, see if we fail to break, and then taking sells like we've seen the reaction at this bearish market structure so far, as we can't deny a new low has been printed on the intraday, and we're seeing sellers in control over the last 3 or 4 days, and we are scalping in intraday trading, right? It's not like we're taking swing positions right here. But the great thing about this lower time frame market structure and price action is you could use these concepts to take very refined entries for swing trades or intraday trades, right? That's the beauty of it. You understand? So gold, do you guys understand with gold how we're potentially breaking below that 4-hour and intraday range we've been in for a month when you're looking at the actual candle bodies here? What I don't want is for us to do a snapback like this. What I do want is for us to do a retest of that bearish market structure and go all the way to revisit these lows like this. That's what I do want. Like down to like 1800 again, 1810, 1800 again, right? But obviously, if we do just snap back in the range and we know how gold behaves and we have that shift in structure, then we will be adapting to the buys right back in the range. But I would like to see all this liquidity be validated as sell side liquidity and some major downside moves come on gold, just as it's still early in the new year and the new month. The snapback is possible, exactly, Shane, but it's something we have to watch, not just rush into. Unless you got some bottom bounce buys, don't start just jumping in buys now when it's already pushed up like 50 pips from this low point and we're about to retest that bearish market structure. We would have easy confirms for safe buys if we come back above this range, because you can see what gold previously did here, and you can see the amount of reactions and bounces we have when price is respecting this 1836 area, right? So if we were to come back in this range and create a support, you have this huge buy upside right back to the top of the range. But what I would like is this bearish structure to continue to be respected, as well as that US dollar strength for us to revisit these lows, because that's a nice intraday. That's a great target, you know? So does that make sense to everybody? So we're just going to keep it on the lower time frame and be observing this structure that's been respected so far for the start of the week, as well as some of these higher time frame key levels, which are the white lines, and some of these medium term zones, which are the red boxes. I want to see how we react at around 1828 in this bear structure. This is a nice bounce, but this isn't like buyers. This isn't showing me aggressively right now buyers are jumping in. And I also want to, just because this low is almost 40 pips below the key level, I'm also going to identify this as a potential target point. Because if we were to have that sell structure, for example, like see how here when this low was created, see how when you have this pullback that retested a medium term zone, or this pullback that retested the bearish structure, we at least revisited that low for our target and then had a bounce from that point, and you couldn't extend these sells until we broke that low to see more sellers pressure. That's the same type of idea here with this new low that's been created on the intradays now. If we were to get those sells, we would have higher probability of getting another reaction here of potential sellers exiting positions and getting a pullback where you could want to secure some or secure around 1820. But if you break below that, then you know you can extend positions, okay? So I'm just going to identify that just with this like little box there, just to show that it's a new little intraday low on gold that's been created on the lower time frame. The red zones are more just based on lower time frame price reaction points, and that we've still been extending over. The white lines are yearly, quarterly, monthly. All right, so gold, I'm just going to quickly type that out so that makes sense to everybody. we've been playing this gold bearish market structure since the start of the week. If you guys were on the Tuesday stream, that's what we were doing, right? Those 1852 sells, 1836 sells. We are just waiting for the key levels, the exhaustion. 1829 here. That's what we just said, man. This fucking guy Jeff made me look at the price for no reason. I was like, oh, where's this guy think we're going? Said right here. Yeah, like obviously the higher time frames on gold, you can't deny are bullish. But what I want to show you guys is something fundamentally and how you can use this historical repetition to your favor. Gold has the potential to play between these candle body highs and lows. And have this historical repetition for months, right? This was the 2008 financial collapse, where obviously gold was extremely bullish. Understand? You had a bunch of liquidity flow into the safe haven precious metal. Then years later, once all-time highs were peaked, you had buyers exit positions and this higher time frame consolidation and order block created between these candle body highs and lows, pretty much that range. As economy started to rebound, the demand for gold decreased as you were coming out of those fear-filled markets. We still maintained overall bullish market structure. Then we had trade wars, Iran war, pandemic markets, new highs created, and all of that priced in. So isn't it very interesting to see how that fundamental impact of the 2008 financial collapse, what it did for the price of gold, and after all that was priced in, and economy started to enter that recovery stage, and you had that corrective pullback, right? So for gold, if I see gold come to these lows, bounce and come to these highs for 5-6 months, I'm not going to think anything of it. To me, that's how gold behaved previously in history during an economic crisis. History always repeats itself, right? Or if we see a break below these candle body lows and we see economy start to open back up, COVID start to fade out from the headlines, everything go back to quote unquote how it used to be, and we break that low, guess what? Economies are entering that recovery stage. We're going to get some deeper corrections on this gold higher time frame structure. Understand? But as of right now, I understand that we've already had that extended buy phase of gold from this liquidity zone area. After we had that market fear of trade wars, after we had that market fear of that potential Iran war, then we had the pandemic markets, and the pandemic markets themselves. You have to understand, when the world went into lockdown, this had a direct impact on gold supply and demand. You had all these gold production facilities around the world and mines shut down for months. So the supply of gold was very limited and the delivery was limited, but the demand was up through the roof. So physical gold price was booming at that time. But as you had economy start to open back up and the supply again start to regulate and be more normal, just to say, like, all these mines open back up, production go back to normal, then you can see we've had this very strong correction in price at these new all-time highs that were created. And what I was showing you guys, and remember what I was showing you guys on GJ, how when GJ was creating new highs on the intraday 4-hour, and then you have that pullback, what's different between buyers extending buys on the higher time frame from these lows and exiting positions here? What's different between that reaction between buyers and sellers? The only thing that's different is the time frame we're looking at, right? But those positional gold buyers, remember, people don't only scalp or intraday trade. People trade every single time frame possible, right? There's people who are in gold buys since the 1990s, scaling up every 10 years. There's people who positionally buy gold. They've been scaling up since 2019, right? As these new all-time highs are created and you have the fundamental concepts of that pandemic being priced in and economies opening up and the fear starting to subside, vaccines coming out, you have a similar reaction to what happened after the 2008 financial crash. So years later, 2008, the 2008 was here, the financial crash impact. This is years, 2-3 years later, as you start to enter an economic recovery stage, years later, right? And then more fear came in the last few years with the trade war, Trump, everything that was going on in the world. Almost had a potential world war, had the pandemic markets instead. Okay? So to me, history is repeating itself, but we're just having a different story being told. Instead of the 2008 financial collapse, we're actively dealing with the pandemic markets. But the financial impact and the reactions on these trading instruments is the same. So if we can understand and digest those basic concepts, we no matter what happens in the future, if it's a war, if it's another pandemic, if it's an economic cold war, like more trade war drama, we can take advantage of it. We know when these economic cycles and how to take advantage of it on a day-to-day basis, right? So that's all I'm trying to say there. It's very interesting though to see that, and you can relate these different events that happen in history and see the impact of it with these technical charts. Does that make sense? That's personally how, when people ask me, oh Jeev, how'd you learn so much? What book did you read? I didn't read a book. Yes, I learned like in Forex family when I first started, like the basics and learned about the markets. But my best teacher was the market itself. A lot of people neglect all the information that is right in front of you. What I told you right now, this isn't hidden information. It's just connecting dots. A lot of people, first of all, don't even open their mind to first search for these dots and search for these puzzle pieces, and then they never can even connect anything. But a lot of people never try to even connect these dots, right? Trading is a journey through the knowledge of it, through the learning of it. There's so much you can learn in these markets. It's endless. Like for all the people who think I know a lot, I think I don't know jack shit. I think I know a lot compared to some of the people in these marketers. But man, compared to people who have been studying these markets for decades, people who are trading these markets on a mathematical perspective, on a scientific perspective, on an economic perspective, you get what I'm saying? It's crazy. There's endless amounts of information out there. Right? So if you really want to learn, studying these fundamental events that have happened in history, backtesting the impact they had on the charts. What did Brexit impact on GB? And if you want to learn about that and you don't even want to do it yourself, guess what? This guy over here, Capital Hungry YouTube channel, guess what this is? Guess what these are? What is this? A timeline of GBPJPY fundamentally and technically. Look at this shit. That's beautiful. You get what I'm saying? When you combine the technicals and fundamentals, the market structure and the price action, along with these real world events that 1000% had an impact on investor behavior, right? This is like, I have full 30-minute webinars breaking down the fundamental and technicals of gold, the fundamentals and technicals of crude oil, the fundamentals and technicals of US30, how the stock market's used as a transfer of wealth tool, how the impact of certain, you get what I'm saying? If you really want to learn more about the financial markets, about technicals and fundamentals, I'm not even saying you have to join Capital Hungry. There's so much on my YouTube already. All these live streams are great. You know what I mean? They're 3-4 hours long. We watch the markets from a reactive perspective, but I also have these higher time frame analysis on like EU, these fundamental webinars, discussions about US recession, discussions about psychology, like how losing in trading is normal. Shit people don't talk about. That is 100% critical in my opinion. You know what I mean? Normalizing losses in trading and accepting losses so you can actually learn how to profit, and various topics. Chart high, evolution of a trader, central banking, you are a debt slave, how the central banks essentially work. Timeline of GJ, GU breakdown, right? Some of these have 200 views. I was posting when nobody even knew I existed, breaking down fundamentals and technicals when I barely knew shit myself, still learning. This was all trial and error, but more of the trial and errors on the Telegram analysis channel. Yeah, so I'm not trying to show this off. I'm just trying to say it's there if you want to learn from my perspective or what I've learned so far, right? You don't see no clickbait with some big booty bitch in a Rolls Royce in an MT4 fucking right? There's no fucking clickbait thumbnails here. There's nothing here that says like fast money, quick money. You know what I mean? There's no Lambos. There's no Lambos in there. There's no. I'm sorry. There's no Louis Vuitton bags and shit. You're not gonna see me in a Versace robe saying, "Hey, follow this EA." You know what I mean? Yeah, 15-year-old trading pro makes his first million. Like, no, it's not. You don't have none of that. And obviously, the capital hungry news Twitter, which posts headlines and news. It's not as many headlines as the news terminal, but it's still like posts a lot of headlines. And the capital hungry free Telegram analysis channel, t.me Monster Finance FX. All right. And if you guys want me to provide more webinars and information, then all you have to do is very simple and it's free. You have to like this stream, subscribe, and share it around. If you guys are in Astro Forex, Daniel Savage's chat, Lambo Raul's chat, any of these trading communities, and they're neglecting you, send the stream in there and let people know what exists out there for free that they can learn from, you know? Okay, so let's go back. I just wanted to show you guys gold on the higher time frames there with those macro fundamental concepts and how it's behaved before and how it's behaving now, which is very interesting. You feel me? So let's go back now. So let's go back to the lower time frame and wait for these trades now. Fucking close to 1828, eh? That retest? It was close. It was like 1 pip away. Anyways, we're still gonna watch it. We're still gonna watch it subjectively or objectively here. I always mix those up. GJ, these are the trade ideas, right? Anybody can zoom out or rewind. I'm just going to zoom in now so we can watch the price action. What I'm starting to see on the lower time frame 1 minute now is at 143 flat. We're starting to get a lot of buyers exhaustion. So if during London session we were to break these 1 minute highs and come above 0.200, that scalp play to retest that bearish market structure is available. Big ball risk buys would be buying at the bottom here at 143 flat. Like if we retest here and fail to break. But keep in mind, we have London open in 19 minutes. The safer buy scalp would be validating the exhaustion at 143, breaking this 1 minute high rejection points and coming above the higher time frame key level. There you could check off a few confirms and have more confidence to take scalp buys up. Right now, this is just a reaction in liquidity generating in the market. Yeah, we're gonna raid those guys later. Seed and Monty. We're gonna raid their stream after. I do more higher time frame oil analysis, but I gotta do a higher time frame webinar on that still. GU, same idea, guys. The trade ideas are here. I just want to zoom in so we can observe the price action. Oh, Monty's not on today. Seed, we'll raid Seed later. And fuck Todd Capital Group and fuck trading with Paul. All right, gold. I'm just gonna type that up, and then we're gonna watch price. Everyone go to my channel in the meantime and hit those like buttons. Fuck off, Mac, bro. This guy. Yeah, go do that, guys. Go to Mac's channel, Asian Persuasion. You guys know it anyways. I always post it. All right, so this bearish market structure is still being respected, right? You guys understand the gold analysis. It's here too. I just want to zoom in now, start watching the price action because right now we just have this lower time frame corrective structure. I want to see how we react in this 1828, 1830 previous low area, like this little range here. If we get any exhaustion confirms, to start taking sells back down. GJ is just being indecisive, having some reactions at 143, still in that bearish bias. GU as well. 14 minutes until London Open. Don't forget the economic events and keep in mind that the UK interest rate is at 7 a.m. Eastern. You guys will see it on your screen there. Don't forget your mental reminders. All right, so now let's go look at. Oh shit, I'm on the wrong thing. All right, let's go look at EURUSD now. So EURUSD is in this corrective state after breaking intraday bullish market structure as the US dollars had more strength and buyers exit out positions from these highs, and we're getting more intraday lows created. Pullback low, pullback low, pullback low. All right. So obviously I'm still in a very bearish bias on EURUSD as long as the US dollar holds strength overnight. See, look at this. Look at this. Oxford is to lead the first trial to explore alternating different COVID vaccines. Oxford leads the first trial investigating dosing with alternating vaccines. Let's try and evaluate the combination of 4 different prime and booster vaccines. See, they're still fucking around with this shit. Oh, sorry, my bad. I was reading these headlines. See what I mean? They're still like these vaccines. They're still testing and doing random shit with it. They're about to mix 4 of them and see what it does. they're about to literally says they're about to mix 4 of these to evaluate 4 different combinations of the prime and booster vaccination. So 100 million people already got the round 1 vaccination, right? But they're still coming out with these new versions, these vaccine cocktails. Yeah, exactly. And man, these new strains, this is all bullshit, man. So, first of all, just to zoom out here before I draw this bearish market structure, because it got deleted, you can see the break of some higher time frame bullish market structure we're starting to get here. That bullish market structure break is from March. This bullish market structure, higher time frame. See those connection points? So we're starting to get a break of that area. I don't know why this moved. And this is some higher time frame bearish market structure as well. When you come to the lower time frame here, you can see this has been respected so far. Why is my screen so messed? There we go. All right. So I'm safely looking for sells on EU with dollar strength and price below 1.199. I'd only be taking buys above 1.205 if we get a bounce from these lows. Let's remove this for now. Clear this up. This is that higher time frame bullish market structure that's been broken, and this is lower time frame bearish market structure. Okay. We have 10 minutes till London open. If we have that continued dollar strength and this structure respected in a failure to break this 1 minute price sensitivity area and highs, and we come below 1.199, which is a higher time frame key level, then we're going down. All right. Oh, sorry. Somebody sent a chart. Can you send it again? I gotta scroll. Oh no, I got it. Mr. Craig. Let's see, sir, what you are looking at. 30-minute chart. GJ, you are already looking for sells. Close below bearish support would be nice. Yes, sir. The only thing I would be a bit iffy about is a potential pullback, but it is looking good if we fail to break back above these candle bodies, and your range to 0.800 makes a lot of sense as well. Very nice how you're being aware of the GBP news. Same type of idea that we are looking at as well. You're cautious of potential ranging. Not bad, not bad. I agree. Yeah, GJ starting to potentially break below 143, which is good for the bearish candle close. Like to get this bearish candle close and then have a retest and continuation down. MSI, what do you think about AUD USD? Send a chart and show me what you think in your analysis, and then I'll give you my view. It's probably going to look very similar to Euro USD. It's going to be similar. If I go to the higher time frames and 4-hour chart on Euro USD right now, and I put in AUD USD, I don't think you guys will be able to tell a difference. See that? Interesting, right? The only difference is with AUD USD, why it had a bounce from these lows is fundamentally because of Reserve Bank of Australia statement the last couple of days. They were giving some optimism towards Australian economic recovery. So the only difference as per the price action between AU and Euro USD and why AU had this bounce is because of that individual impacting factor on the Australian dollar from the comments of the Reserve Bank of Australia's Governor Lowe. So when he was talking about potential economic recovery in Australia, this dip got bought up, where you could see on Euro USD, because we didn't have that individual positive impacting factor, it's still very bearish, right? But the overall structure, when you look at AUD USD versus Euro USD on the higher time frames, is very similar. So what I can tell you right now, based on the 4-hour time frames and based on this previous price sensitivity area, is that we're still remaining below the significant price point, and we're having this strong snapback of sellers jumping back in every time you have this impulsive buy side move. And you can see we're expecting that intraday bearish market structure. So if the US dollar holds strength and we fail to break above these current highs and clear below all these wicks to the low side here, you have that range right down to fill this low around 0.756. The only difference, like I told you, between AU and EU right now is to be cautious that Australian dollar have that short-term support from the Reserve Bank of Australia comments from yesterday, right? Yesterday and the day before that, which I'll show you guys here. So you can see here the Reserve Bank right here. I said this is just an update that I sent to the private channel because, yo, 0.76. Yo, that buy bounce is nice. Where's that analysis? Where the fuck is that? Here it is. Yo, look at this GBP CHF analysis. Look at this AUD USD analysis we did. For these sells down below 0.76 and then potential bounce off 0.76 with the Reserve Bank of Australia sentiment. So far, we had that bounce there, right? But anyways, what I wanted to mainly show you, this is like higher time frame analysis. Yo, EA sells are running great too. Are you guys still in those EA sells? That's up 100 pips from the sells from 0.58. Because in Capital Hungry Private Chat, we do higher time frame swing analysis and scalping analysis for people who trade different styles and for people who like have more patience, they want to hold for days or weeks. But AUD USD, what I wanted to show you guys was as we approach that low point, we had Governor Lowe of the Reserve Bank of Australia speaking publicly just a couple of days ago, talking about optimism for AUD, how the COVID lockdowns have not been as damaging, how they're still like confident about Australians getting vaccinated, unemployment benefits. The fiscal response has been incredibly important in the recovery. There's no Cold War, etc., etc., right? So this caused a bounce on AUD USD as well as the Australian stock market in the short term. That's the only thing I want you guys to be a little bit aware of on trading AUD USD, all right? Understand? But this is the AUD USD analysis we ran for 80 pip sells from 0.76, 0.767 down to 0.76 flat. So you guys are now getting a sneak peek of some CH analysis, whoever's on the stream, about the EA sells we were looking for from 1.58 if we didn't break the market structure, multiple potentials for entries here. That's up like 100 pips. GBP CHF, we've been calling buys on here for like swing trades since 0.208 break. So it's been going on for like a week now or week or two, but still in profit, 200 pips. And then AUD USD, those sells. Gave a couple of retests and those sells down. EU starting to create a flat candle body support at the key level. If we fail to break this area and create a support, I want to see what this range is up to retest structure. 25 pips, that's not a bad range. Yeah, don't worry. It's 2 minutes until London Open now. I always like to see how like the first 10 minutes of London Open, let it do its liquidity grabs, and then patiently wait for the retests or patiently wait for our breakout entries or entry points. But what I want to tell you guys is if GBP pairs range overnight due to the central bank speaking in the morning for Bank of England, of course, then be cautious and don't fight a ranging market or don't just start jumping in trades and wasting your capital and mental energy. Because some of these trade ideas, if they don't play out through London, they can play out through New York or Asian session tomorrow. You know what I mean? So yeah, Mac was in CH since the start. But off and on, like comes in sometimes, like, you know what I mean, gets busy and shit. All right, everybody. So London Open right now, we're not taking any trades right at London Open anyways. We're gonna wait, like let the market cook, do its thing for the first 5-10 minutes, see how price sets up. I just have to go to the washroom. I've been talking too much and drinking this coffee, so now I gotta drain the main vein, you know? Those trade ideas are set. You guys can always rewind this stream to see the trade ideas. I still have to do US30 and UCAD analysis, which I'll do when I come back. And let's just see how London Open starts up. All right. Make sure you guys like and subscribe and share the stream around for more. All right. What's going on here? So London Open. With these headlines, not much. What's this guy want? Somebody said, hey, even though the US dollar is strong, GU is pushing down. What? Bro, what? What this man said? Hey, even though the US dollar is strong, but GU is pushing down. Do you have any analysis why? It makes sense GJ is going down because JPY is stronger than GBP, so it's pushing down. But on GU, it doesn't make sense. What the hell? What do you mean? I don't know how to answer this one. Fuck. Man, I had a gold sell limit at 1828. It missed by 10 pips. Not even. It missed by fucking 5 pips. Anybody take that gold short near this area? Let's see if we break below 1820. Man, I'm actually a little bit mad that missed by 10 pips there. Yeah, I had a sell limit at 1828. Anybody take that gold sell? Austin, if you send me a chart and tell me what you see, then I'll add on to it. But I will be doing US30 analysis in a couple of seconds. I'm pissed. My limit didn't get triggered. Yeah, I wanted it to go to 1828 as well. It was like 5 pips off. I got a little bit of FOMO right now, can't lie. I do during the stream because it's hard to enter manually while I'm talking and looking at different pairs. You know what I mean? So during the stream, I'll usually set some limits at like very key levels, not just anywhere willy nilly. And this would have been if this pushed up 5 more pips, I would have got 70 pips in like 3 minutes right now. Been done. It would have been done for the week. It's all good. We're still reacting around 1820. If anybody did catch that 30, 40 pips on gold, I would advise securing some and then leaving some risk free. And then we still got gold is still playing in this little bit of a lower time frame range and consolidation. So we might still get. I only risk a 10 to 15 pip stop loss when I set the limits. Just because you know how sometimes when you're not watching, gold could like snap up 30 pips above the level. So I don't want to risk that. Worst case, I'll take worst case if I use a 5 lot, I'll lose $500 to $750. But like my target would have been 1820, which is 80 pips down. That would have been like $3,500, right? So it's almost like a 1 to 3, 1 to 4 with what I'm willing to risk. But I deleted that now. I'm gonna watch it manually. Okay, so we're still bouncing. No FOMO if you missed the gold sell. You could see that this lower wick, it's bouncing around that 1820 region. So let's just still watch that accordingly. I didn't have anything set for GJ, like personally. I was looking at gold. EURUSD, big balls bounce like I was talking about off the key level on the dot. That's like, you know what I mean? These key levels are special. They're special. Remember I was talking about these 20 pip, like if we came to the key level and failed to break? But we're still watching this bearish market structure where I'd like to get a retest to. It's following the yellow brick road though. It's following the yellow magic line so far. Gold. I always give you guys good advice of when to secure on gold so you don't lose all your profit because we know gold is vicious this way with how it can do these lower time frame pullbacks. So that's why when I saw it come towards like 9 pips off from 1820 and there's a little bit of price sensitivity in the area here, that I advise you guys to secure some and then leave runners risk free because you can at least you could at least got those 20, 30, 40 pips, right? And you have to understand and not be greedy that when you're scalping, you're meant to be in the markets for a short period of time. And with gold, that's 3 minutes. You can potentially get 40 pips, right? So now let's just watch gold accordingly. If we come back to 1828, possibly get more ejection. What I am going to do now is start highlighting some potential corrective structure here, because this will tell me that if we reject 1828 and then come below 1820 and break this minor corrective structure, that we could have further sells down from that safe 1820 perspective. Yeah. Now my FOMO for gold is gone. Every time I tell people to secure, a pullback happens. GJ? Shit, I wasn't paying attention. So GJ broke below GJ broke below 143, did a very nice retest for anybody who got a scalp for a quick 10 pips. The next target would be points to slowly creep down and reach 0.800 area, right? We do have this range down to like 0.800 I want to see get tapped, and then I would like all the way down to 0.500 to retest previous highs, because you see how GJ behaves, and once you have more aggressive pullbacks, when I zoom out here, so see here, when you started having this bullish trending market, I don't know why that was so big, man. The fuck is that? Okay, look. Right? See how when buyers pushed up, this high was created, and then you had this pullback phase. Buyers jump in from a better demand area, better price point, and then a continuation up. These pullbacks pretty much came to retest the previous high. And then you break above here. This pullback pretty much came to retest this previous high as you start making your way up. So it would be ideal for us to retest this, like slowly creep down and retest the previous high, but we have to watch the corrective structure accordingly. If we can clear the 900 area, you guys will get the 0.800. We're looking at target 0.800, but just watch price action accordingly, because we are taking these corrective counter trend trades. So you want to be very objective. If you could secure some partials at 10 pips for a scalp and then leave runners to 0.800, at least you are protecting yourself and securing something. GBP USD did the exact same thing about the break below 1.361 here. Like, we didn't get the full pullback to structure. Instead, we got the break below and the pullback, the breaks of the lows and the pullback to 316, which is a similar idea now to, oh, this ran like 30 pips already. GU ran nice, eh? But yeah, if anybody took that sell trade as we were in a bearish bias, you got 20 pips on that. But similar idea, we have to be very cautious of how the dollar's moving. We're getting strong rejections on the dollar at new highs, and we could get that potential pullback, right? So watch your positions accordingly. If you got 30, 20, 15 pips, secure some partials, take some profit out of the market and take some money off the table, and then leave your other runners risk free. If your runners get taken out risk free, worst case, you already made some profit, you protected your capital, and then you can objectively watch the markets from an emotionally neutral perspective and wait for the next potential trade, either in a couple of hours or maybe at New York session. Because I'm still a bit iffy about GBP pairs doing any ranging moves due to the Bank of England sentiment, which is in the morning, right? So if GJ starts to get a bit whipsawy from a technical perspective, I wouldn't be surprised, because we have that Bank of England sentiment. But right now, that structure is being respected very nice. Fucking Elon Musk just said Doge coin is the people's crypto. This guy's a dick. This guy's fucking. This guy's a goon, man. This guy's probably pumping that shit. This is what I see. Austin, did you send something? You didn't send a chart. I think you have to send just the last part of the trading view link from the X forward. What's the code for it? ABSUD? Are you trolling me, Jeff? Is that the code for it? Or something else? Oh, this shit. This shit? This is it, right? The first. Let's go to the first one. Oh, you're saying it's absurd? Oh, is that what you meant to say? It's absurd. Oh. Austin, you have to send it. See how Kushpreet just sent it? You have to send it like that. Links don't show up in the chat. Bro, this man. This is the 1 minute chart. What's it normally look like? Is this when they started pumping it? This is ridiculous. But this is worth less than a cent. This is less than 1 cent. No wonder this probably has very low market cap and it's very low value, no? 0.06? Oh. Yeah, you're right. Sorry, I thought my eyes were hurting with all the zeros. I thought it was 0.006. Yeah, you're right. It's 6 cents. I saw so many zeros. I was like, what's the price of this? Yeah, you're correct. It's 6 cents. But still, that's still very, very cheap, no? It's let's see what happened with this Elon Musk tweet on this 1 minute chart. Just for a couple minutes. I want to see if it pumps from this tweet. This tweet just came out. Should we buy it? No, I'm kidding. Nobody fucking buy Dogecoin or what? How do you pronounce this shit? Dogcoin? Dogi? Fam, this is 6 cents. This is a pure pump and dump scheme. Right? How can you not deny it's a pump and dump scheme? Yeah, Elon's a pretty funny guy, man. Well, I would be that funny too if I was a billionaire in this board. Fucking man's bored as fuck. Alright, what do we have this on? GBP USD? Oh, yo, let's see if a pump is coming in this minute candle. Let's just watch. Let's just watch for 30 seconds. Magic goes like to... Yeah, I that's where I remember this whole coin started as a joke, no? How do you send a chart? You just send you just send this part of the last part of the URL or something like that from the X forward. This is trash, yo. Fuck this shit. I hope it melts. Anybody in GJ still? You got like 15 pips. We're slowly making our way down to 0.800. W's in the chat if you call it GJ, GU, or gold. We didn't do analysis on USDCAD or US30 yet. All right, I'm gonna check people's charts now, starting with Austin and then starting with Leonard. Is it Leonard or Leonard? I don't know. You know, sometimes it's different depending where you're from. This is the SPX Teflon Dawn 2-hour chart. All right, the only thing that's an issue here is that we haven't gotten a clean break below these intraday lows, and this is sitting at near close to highs, right? So this is just starting to create a bit of a consolidation and order block at the highs. And overall stock markets, if you look at global stock markets right now, just from around the world, you can see that every single region has had this pullback and corrective phase from these highs in a pretty aggressive bounce sense. Like you can see Japan, it had a bit of a pullback. That pullback didn't break structure and it continued up. Bank of Japan's Kuroda blatantly even came out in the open and said, hey, we're buying Japan market ETFs and we're in $100 billion profit USD and our stop loss is at 21K. That's what they said. Man typed it out like I'm supposed to know how to pronounce it. You just typed it out the same way as your username says. How does that tell me the pronunciation if it's Leonard or Leonard? Right? So global equity markets are still very bullish. So I'd be very iffy about taking these sells, but again, it's not like you're jumping in sells right now. You are waiting for the break of this minor bullish structure and a failure to break these highs and a retest, then continuation down to a previous zone. So so, so if you break below this structure and we have any market fear, then yeah, there's some potential for some downside. But other than that, stock markets have been very bullish, and your best bet would be to wait for the break of the highs, validate this as buyer side liquidity, and get another impulsive move to the upside, unless we have something to shift market structure from any fundamental catalyst. Lanad? It's Linad? Lanad? Okay, whatever. I'm just gonna pull out your chart. First we'll look at Kushpreets. Man's parents were smoking on that gas and they named him Euro JPY. So now this is the 4-hour chart. Euro JPY fundamentally is going to be very, very similar to GU or GJ, where after these highs have been created and we've had that overall bullish market structure, you can see we're starting to enter more of that corrective and pullback phase. So I would have personally liked the entry up here with the failure to break because you already identified the zone and you might have had the price action confirms in the lower time frame. But I do like this safer entry here. And your TP1 makes sense of at least revisiting those previous lows, and then your secondary target of continuing this corrective structure and working our way down would make sense if we have that continuation with the Japanese yen and US dollar strength. It's a similar idea where you have the risk currency against the safe haven currency. So similar to like what we're looking at on GJ as we're playing those corrective sells down. But you just have to be cautious that the higher time frames on EJ are still very bullish. So as you're playing this corrective structure, you have to be very objective. And if we fail to break these lows and start to get buyers jumping in from this previous low and get a shift in structure, then it's probably best to trade manage and understand that the higher time frame buyers are jumping back into the market and that pullback phase is coming to an end, right? But for right now, we are respecting that bearish market structure, and your first TP does make sense. So yeah, see, yeah, like GJ slowly making his way pretty close to 0.800, almost for that 20 pip scalp. This 1 minute price action was as smooth as you could pretty much want it for that break and retest on GJ and GU. Anybody still in GU? You can extend your runner still. Yeah, very smooth. Euro USD being extremely messy. Nothing too clean yet. All right, let's check out US30. Okay, we got some issues from the Irish foreign minister. This guy's a dickhead. He's always very pessimistic. Irish foreign minister says the extension of North Ireland protocol grace periods is under consideration. Needs to be realistic on the protocol because if they are not, there will be a dramatic change here because they don't want a dramatic change. There's not going to be a dramatic change here. Just push GJ down, buddy. Yeah, see what I mean on US30? Overall, very bullish. Every dip, like you can play the sells, but every sell is just a pullback to a demand area for buyers to jump back in as buyers exit positions. And if you're not watching, those dips get corrected almost in the same period of time. So I'm primarily looking at this order block in liquidity zone that's being created, and I'm waiting for a break above this order block to validate this as buyer side liquidity, as you can't fight the Federal Reserve. And once I get a break above here on the 1 minute highs, I'm looking to go right back and target previous highs on US30. I'd only be looking for sells below 3,500. Right now, we're just in a consolidation on the intraday time frames, generating liquidity, and we're still holding overall bullish market structure with the Fed still supporting the stock market, right? And this is something that a private member and I were discussing yesterday, and prices are like Anya's probably annoyed because price has been in this range since that day. For you, do you only trade US30, Anya? Right? It's probably killing you. I just looked at it. This is the same. This is the exact same price since. Yeah. Once we do have the break about these 1 minute highs, as the market structure is still bullish and fundamentally markets are still optimistic with that central bank support, you can validate all of this as buyer side order flow for a move to the upside. Right? Mr. Samuel, very nice GJ trade, very nice scalp. This is exactly what we were looking at. The market structure formed. You waited for the 10 pips. You closed it, 60% close, 40% left to run at break even. GJ's doing an aggressive pullback now as well. It was pretty close to 0.800. Hopefully, most people got to secure 10 to 15 pips, But it's doing, because you have to remember, when you're in this corrective structure and it's a counter trend, you're going to have, like, for example, you're going to have these sell plays as scalps, which can run down the next range. But as you're counter trend trading, if you start to notice exhaustion, you can't be angry if you held and didn't secure positions and price does a pullback because GJ is still bullish and the corrective structure is still very active. And you have to understand that this is a new 30-minute candle, right? So if we continue to reject 143, even if we come to 143.2, we're still in that bearish bias. But as scalp traders and trading with the session volume, you have to be very objective and be in and out of the market. So that's why, like, we're for people who were in gold sells, even though gold came back to retest the structure again, when gold had that sell off from these points and went down 20, 30 pips, and we didn't break these previous lows or 1820 yet, I just advise people to secure some positions, to secure some profit. And you have to understand from a psychological perspective, when you secure profit and you remove your risk out of the market, you are relieving that stress or pressure to take another trade or to be impulsive or to do something emotional. As long as you can stay emotionally neutral and don't start to get greedy off that dopamine hit you get from taking a winning trade. Okay? So you have to be very objective when you're scalping and when you're doing that. So with GJ, this break and retest and reaction at 143, an entry point was great, but you can start to notice the bearish candles getting weaker, and with the new 30-minute candle, expect a pullback, right? Now, we're still respecting this bearish market structure with potential to continue down, and if you have 143 entries, you're still risk free, but at least when you secured some profit, and at least when you remove your risk out of the market, you can watch the markets from an emotionally neutral perspective and you can always attack and jab again, right? Too many people will come into the market and be planning to scalp and be saying, yeah, I'm going to scalp London session. I'm going to use the London volume, look for some scalps. But as soon as they get in an entry, they start to get greedy, forget that scalping is being in and out of the market fairly quick, and then watching it objectively and letting runners go risk free. And they try to extend these scalps into swing trades. All of a sudden, they want it to go 100 pips in their favor, right? You have to take what you can from the markets and watch it from an emotional neutral perspective and keep those psychological reminders in check. So when we have these streams or when we're doing it in our group or when you have a community, it's good to have these discussions with each other and say, hey, don't forget to stay emotionally neutral. Hey, don't forget to follow your trading plan. If you took a loss, relax, go cool down, come back and wait for another trading setup or come back another day. Hey guys, the markets are looking like it's ranging right now. Maybe we should just sit out. hey, the market's looking like it's trending clean. We should execute on this when the opportunity comes, right? Sometimes the analysis will be correct, but the market can range for the entire day or for the entire week sometimes, depending on what's going on fundamentally, the timing of the month, the year. There's so many factors at play, and there's too many people in trading who waste mental energy and stress about things that they have zero control over, but don't put any effort or energy into things that they can control, such as when they trade, how they trade, what they are trading, why they are trading. These are all factors that you can 100% control. You choose when you want to enter the market, when you want to exit the market. You choose to see that the market's ranging and potentially put yourself in that situation, right? These are all personal decisions, but people usually make these decisions subconsciously, emotionally, and then end up making fatal mistakes in their trading. If you can become active in your decision making process and say and make the right decisions through your trading and make the and follow those right psychological concepts, that's when I feel you're really going to elevate your trading. Some days a trade's not going to be available. The market isn't a 9 to 5 job. There's not all you don't come and look for 8 hours and you get a paycheck. It doesn't work that way. You're getting paid for your skill set, knowledge, experience, and risk you are putting in the market for a potential reward. It's a completely different payment setup, but too many people subconsciously bring over that 9 to 5 payment, the way people get paid for their time, because everybody's so programmed working 9 to 5s, or our parents did, or everybody's so used to getting paid for your time that they think they can just stare at the charts and keep taking trade after trade and make money. It doesn't work that way. As humans, we have inefficiencies and weaknesses, such as exhaustion, such as our emotions, anything that can be impacting us outside of trading, etc., etc. These weaknesses and inefficiencies get exploited by the market. The more time you spend actually actively trying to trade in the markets, the higher probability you have of losing due to these human inefficiencies and weaknesses. It's like when you go to a casino, or if you watch anybody who goes to a casino, when they start making money and actually making money, like I'm not talking about $100 or playing slots, when they start actually making thousands of dollars at the tables, all of a sudden the casino reps come and offer you dinner, they offer you drinks, they offer you a hotel room to stay the night. You think they're offering you all of that because they're happy you made money off them and they want to spoil you? No, they're offering you these little incentives to make you stay in the casino longer, because they know there's a higher probability of you giving all of your winnings right back to them, and they don't mind sacrificing a stake in a hotel room to get those probability and odds in their favor. It's a business, it's numbers. It's just the way humans are programmed and work, and the market is no different in the casino, from the sense that it's extremely seductive, and people can be trading all day and making no progress but still be actively trading. Somebody could be trading on emotions for hours, burning through their account, and then they're not going to wake up until they crash their account. Then they're sitting there, and we've all been there, I've been there, where you just go enter this trance of trading like a retard. You burn through your whole account doing dumbass things that you know are dumb, but at the time you keep doing it. And then you finally wake up when your account is crashed. And then you sit there pissed at yourself, saying, why did I do that? Right? If you don't start intercepting your decision making process, you are going to continue to follow these subconscious, shitty, like these shitty human behavioral habits, right? Of wanting things fast, of wanting things impulsively, convenient, without doing any work or putting in the time or effort, having false expectations. Understand? So trust me, we've all been there. But the key is learning from it. The key is reflecting on this, understanding that it's 100% normal. We're human, we're not machines. But you have to be self-aware enough to say, I'm fucking up and making these mistakes. It's not the stream I'm following. It's not the mentor I paid for. At the end of the day, it's me. I'm the one clicking the buttons. I'm the one who doesn't have a trading plan. I'm the one who's over leveraging, over trading. I'm the one who's not doing any analysis, not studying the fundamentals, not back testing technicals. I'm the one who's not putting the time and effort in. You have to be self-aware enough to admit that to yourself. And as soon as you can do that, and you can remove that ego. Listen, I'm cocky and have an ego when I'm sharing analysis and information from what I've learned. But personally, you know why I'm so cocky and have an ego? Because I'm already hard as fuck on myself and shit on myself harder than I shit on anybody else, or anybody else is ever gonna shit on me. Right? Do you understand? Nobody else has to tell me to work harder, or to fix what I'm doing wrong, or that I have this bad habit. Like, I can actively notice that with the, like, outside of trading, with the lockdowns in my area and with the gyms being shut down, I got lazy as fuck. My diet got shit. I stopped working out, and this starts to impact my thinking process. This starts to impact my mind, my emotions. Guess what? That's going to be dragged into trading. I had to take a break, and I still am taking a break from trading. All the reason just because of having my lifestyle outside of trading have a negative short term impact. You know what I mean? Falling out that healthy lifestyle, eating like shit, drinking more, not working out, and having an impact on my emotions, my energy levels, and everything else down the line. It's going to impact your trading as well. But if you're not self-aware enough to even identify these things, and then actively work towards fixing them, which is going to come from repetition of following good habits, then you're never going to be a successful trader. I'm sorry. A successful manual trader, unless you can find a way to program your trading style into an algorithm and make it all automated, then all right, you don't have to worry about the psychology side as much, I'd say. But as long as you are manually trading yourself, you're making those decisions, the trading psychology is one of the most important things. All right. Yeah, GJ starting to slow down now. The sell scalps were nice for 10, 15 pips. We didn't get that full 20 pip range. We were 4 pips away from tapping 0.800, which is fine. We still understand we have some UK PMI data in 40 minutes for the construction side PMI, as well as the Bank of England in the morning. Okay. I don't ban anybody. Trolls, you have to understand, guys. In the position that I'm in, I make money from trading. I make money from Capital Hungry. I make money from a business outside of like this digital world, like with my cousins, right? I just recently quit a full-time salary bank job in the middle of 2020. Like, I had income streams, and I'm fairly comfortable in the position I am in with the work I've put in. When I deal with trolls, these people feed me. Right? When someone comes and talks shit, you know what I picture? I picture a person halfway across the world, so focused on what I'm doing, so intrigued and interested by me, either from a hateful perspective, from a negative perspective, or a positive perspective. I'm still living in your brain rent free, and I don't know you exist. Isn't that fucking crazy? I'm living in someone's brain, someone who has who's living their whole life. They're thinking about me. They actively log into their computer, come onto YouTube, come on the stream, go into the YouTube chat, and type a message to me. They're giving their time and energy to me. You're fucking feeding me. Why do you think I'm so active? Because I feed off you losers. That shit fucking boosts me. Think about that concept of what a troll does to come talk to me in their free time, at their computer. Any troll, I'm not talking about just this one guy. For the people who come do it from a positive perspective, I appreciate that support, right? But for the people who do it from a trolling perspective, think about what they are actively doing. Some guy who went to work, who I don't know exists, halfway around the fucking world. Like this guy, Jack John. This guy sounds like a bucket getting amped and shit. This guy, Jack John, has a fake YouTube profile. This guy went to work for 8 hours today. He went to work. He dealt with bullshit from his wife or family or off his friends. I don't know he exists. I have no idea what he looks like, his voice sounds like. I don't know he exists. through some point in his day, this man fucking thought about me. You thought about me. I'm like a god to you. You thought about me in your free time. And then you came on this stream on a fake YouTube account to send a message to me. Whether it's a good or bad message, you typed that all out all because of me. You sent that energy for me. You spent that time and effort. You could have been spending that time and effort into developing yourself, into honing your skill sets, into making more money, into helping your family, into helping your friends, but you did it. You fucking spent it on me. So I appreciate that. Thank you. Thank you so much. Thank you so much for not wanting to help your family and friends or yourself, but giving me your time and energy. I appreciate that. Thank you for the watch time and thank you for the view. So that's why if you guys have noticed, I always interact with the trolls. That's why. I like interacting with them. They put their time and effort to come talk to me. Whether they want to talk shit or whether they want to talk shit or they want to say good things, they're fucking giving me their time and energy. Yeah, and I even help them, right? I'm even helping them. As much as they hate it, they're learning. They come here and learn. They watch every day. Okay, markets. Oh man, I closed GU by accident. It doesn't wind me up. It feeds me. You have to understand. I'm chilling in my fucking room right now. You know what I mean? I haven't even traded for 2 weeks because I made 20K at the start of January. I can be able to put myself in these situations. And I'm not even rich. I'm not even like at the point where I want to be. You know what I mean? I'm not even where I want to be, but I'm light years ahead of most people, of the 99%, just from a mental perspective, from a financial perspective, from a knowledge perspective. But am I where I want to be? Where at financial freedom? Nah, man. I'm not like happy with where I am. But these people who are trolls and come give me their time and energy, holy fuck! You gotta think like where they are. Yeah, I want to see if we could get a retest of 1828 or a break below 1820. GJ slowly still creeping down. It's slowly still running down. We didn't get a break of structure yet or anything. Yeah, even when I was making, yeah, I only quit that bank job um last year, March. Yeah. And at the end of the day, if you guys don't like the streams, oh man said Escanor, that's a great compliment. If you guys don't like the streams, like you just can click that X button, you know what I mean? Press the power button on your monitor. Close your eyes. Mute it. Where'd my levels go for GU here? Oh, it should be in this section. Wait, I'm just trying to bring GU back up. All right, there we go. Where'd all the drawings go, man? Is this glitching? Trading View been acting up recently. Anybody still holding your GJ or GU runners? GU's running smoother than GJ. It's still slowly creeping down. Yeah, you can't talk about selling SIM cards. I was watching this documentary Mac sent about this guy. Fuck, what was his name, Mac? The hacker? Gummo? You guys seen that? Gummo? Have you guys seen that? Man, that guy has man. This guy's made millions and millions of dollars. Man had 80. Man mined 80,000 Bitcoin when it was at $200 a coin. 80,000 Bitcoins, not $80,000 in Bitcoin. 80,000 coins. He was the man who connected the Chicago Mercantile Exchange, the CME, to the NYSE with the fiber optic cables and created that infrastructure. And he used to hack DirecTV and made like 10 million. They caught him, then they ended up giving him a job. He made like millions of dollars from that. He made like millions of dollars working with the government. He made like millions of dollars from that stock stuff, like creating the stock market infrastructure. Now he catches other like pro ass hackers. Just search on YouTube Gummo hacker. It'll be like a 40-minute. It'll be like a 40-minute like little YouTube documentary. It's very interesting. Now he is, but he used to be. Yeah, he's like the hacker that hacks. Yeah, he's next level, and you can tell the way he's talking. He's being very selective of like not saying the wrong things or giving away of like what he really does. You could tell there's so much shit he probably didn't say that he just couldn't say. He just said like the bare basics. Gummo, the hacker Gummo. Yeah, it's very interesting. GU's moving a lot cleaner than GJ. GJ's being a bit of a bitch right now, right? We don't have any economic headlines here. Gold just starting to mess around. I would like if gold comes below 1820, we can take those safer sells down. Even if we go to revisit these previous lows on the lower time frame, like for a quick downside move, that's 30 to 40 pips. Yeah, this one. This guy. This guy's fucking this guy's a beast, man. Dollar's still bullish, which is good for our potential like EU sells, GU sells, right? We were just making sure dollar didn't give that pullback. We wanted it bullish, so EU starting to break below the key level. Yeah, EU starting to break below the key levels. Look for a retest and continuation down. UCAD's right back to this buy level again as well. I would see the more favorable buys, to be honest. High risk, high reward buys. High risk, high reward buys would be at these 1 minute lows in that support zone with that US dollar strength. But the safer buys for 50 pips would be above these 1 minute highs here. If you could break above here and validate this as buyer side liquidity, as we've just been in about this 30 pip range between these 1 minute highs and lows, we could have an easy squeeze to the upside. Yeah, GJ's being way more messier than GU. GU had some nice break and retest downside with this trade idea we were looking at for the sells. 1.316 1.361 sells. That ran nice for 30 pips. GJ's being a bitch though. Are you looking for a buy reaction here? This is nice. I really like this. This is clean. Yeah, if we start to make a lower time frame support around this 0.800 area, you have to understand we're only 3 to 4 pips away from that 0.800 area, and GJ higher time frame is very bullish. So that lower time frame structure is still bearish though, but from a technical perspective of where you're looking to target around this area, if we could create a support here and get that lower time frame exhaustion, for some higher risk, higher reward buys, it would make sense for the way GJ's been behaving for you to capitalize on that potential upside move. But other than that, it's still maintaining, like on the lower time frame, that bearish market structure where if you get that bounce from point if you get that bounce from 0.800, if we do get that exhaustion around this area and you were to take higher risk, higher reward buys, I would be setting your target up around 0.500 and 0.400, because even if we remain below there, like we were talking about this other trade idea here, if we were to get this higher risk sell area, as GJ does those aggressive pullbacks to retest this bearish market structure, this is where I'd be looking to exit if you took those higher risk buys. GJ's acting up because of UJ. God damn. You really be trading with that in your head, eh? Thinking that makes sense. GJ probably just more ranging because Japanese yen has been a bit more indecisive, and we have the Bank of England stuff at 7 in the morning. We have the hourly candle close in 6 minutes. We have the hourly candle close in 6 minutes, and some PMI data at 4:30 a.m. Eastern. Yeah. Besides this scalp for like 15 pips and the GU scalp, or anybody who caught the gold sell, not much else happened. US30 coming above 750 and potentially retesting these highs. If it breaks above here, we will get a nice squeeze of 150 points up to 31k flat. Why I said so is because I'm long on UJ and short on GJ. The only shitty thing about trading UJ is because it can get very indecisive because it's a safe haven currency against a safe haven currency. Both the US dollar and Japanese yen are safe haven currencies. So when you have any major fundamental catalysts come to the scene that makes money go into the safe haven currencies, you can have indecisive moves. The big ball buys would be a 750 retest or the lower side of the order block retest. Yeah. Yeah, US dollar still bullish like we were looking at. Kent, if you send a chart with AJ and tell me what you're looking at, I'll give you my point of view. Euro USD, if we break below the key level, yes, we are looking for these sells down. What is your target here? Pretty much the same entry point we're looking at right here, right now, but you're looking for a daily trade, eh? More of a swing trade, a 1 to 2 swing trade to retest this previous price sensitivity area. As long as we maintain the corrective structure, but just be cautious that you're looking at the daily chart, and when you zoom out, I'm not saying that we're going to hit your stop loss, but every time EU in this corrective structure creates a bit of a significant low, we get an aggressive pullback that can run like 50 to 100 plus pips. And you can see now we are starting to create a pretty significant low, which is at your entry point. So if we start to create a support and show any exhaustion, I don't want you to get caught in a pullback that'll like create bearish market structure and take you out and then continue down. I personally would have been better to enter on the pull. Like when you're taking those swing trades and those higher time frame trades, it's better to wait for these intraday pullbacks rather than to enter at a low or a high. When you're scalping, it's different because when you're scalping, you're trying to play with the momentum and catch 10, 20, 30 pips. But when you're day trading or swing trading, trying to catch like 200, 300, 400 pips, you have to be very mindful of the intraday market waves when highs or lows are created. And when you get that reaction of sellers cashing out and creating that pullback. Because if you're entering at this low, similar to like what you could have done here, and you get caught in that pullback, that's going to take you out and then go down, right? So just be very mindful that we are creating a pretty significant low below the previous low. So if we start to create a bit of support, you could be in profit for a bit, but then if we get that exhaustion and create a pullback, just watch that accordingly as you're taking that like daily trade based on like the daily chart. Gold, I want to get a break below 1820 and we can get that squeeze down. Anybody still holding their like sells from the 1827, 1828 area here? GJ looks like GJ still like maintaining the bearish market structure. It still didn't come back to 143 yet. It's just being a bitch. You know, GU was running a lot smoother with like how see how GU's corrective structure, it would just do these pullbacks and instantly come down. It's a lot. I like seeing this when you're scalping. GU's a lot smoother. Yeah, that 1860 low is a good target point like we were talking about. If we can break below 1820, you can extend that. But watch if we come here, Mark, at 1820, just because over the last couple of hours we've seen some reactions at this area. So yes, Mac, let me see your Sunday. And be cautious, Mark, about the new hourly candle potentially making an upper wick because we know how aggressive gold's lower time frame pullbacks are, especially like when the new hourly candles or 4-hour candles set up. And that's like right now after this 30 seconds here. Let's see how the hourly candles are closing actually across the board here. This is still nice. I like this price action. Remember how I was telling you guys that I didn't want price to snap back at the start of the webinar, that I wanted this 50% correction. I didn't want price to come all the way back to 1832. So I'm liking this still. You guys remember that from the start of this webinar when we were doing the gold analysis? We're looking to the left. We didn't want gold to do a full correction and come back in the range because then it's just showing us that it's going to be bullish again. I liked how we had this impulsive sell move of 200 pips from this liquidity zone and then about that 100 pip correction and sellers jumping back in now. I would like to revisit these lows is our target and potentially go even lower to revisit like that 1800s area, but at least to revisit these lows made from New York would be ideal, right? You just got to be cautious as we're watching the price action. Dollar still holding strength, which is good. New hourly candles. So I like how this hourly candle closed. How it here, right here. I like how this rejections here around that 50% correction point, how we engulfed the previous hour coming in below this medium range. We made a bit of a nipple wick, so this could straight melt down, but it'd be more confirms if we come below 1820. But it already does have a bit of a nipple wick at the top, at least something on this Owanda feed. I'll check your guys' charts out in a second. Sorry, just let me check these, how these hourly candles close and are opening up. And let's watch the reaction here at 1820. GJ still looking good, guys. Like as per the bearish, like you know, it's being a bitch on the lower time frames, but as per the intraday candle closures, this is still nice. A nipple wick, like you know, like very little wick, like a nipple size. Yeah. You know what I mean? Like a small wick. Like these, see these, like sometimes when candles don't create a wick, there's potential it can create one. But at least when it creates these very small wicks, it's something, right? GJ's pretty much reacting at those previous 1 minute lows. Let's see if we get a reaction here or if we still melt down. If you guys had your 143 runners risk free, I don't know about you guys. When I set risk free, and the private channel knows this, I always put my entry, my stop loss right on top of the entry. I don't mind sacrificing the few dollars with the commission and maybe 1 pip loss with the spread. Okay. I don't like, to me, with the lots I use, when some of my winning trades are thousands of dollars or hundreds of dollars, I don't mind sacrifice. To me, like a $40 loss, $30 loss, like when you see some of the trades I've taken here, like from last week, I'll show you guys what I mean. I have to zoom in. The fuck am I, man? I think I zoomed to like a year ago. Where the fuck am I? January. Like, see this? See these losses here? These are bigger losses. Let me get the full sheet. Like for example, see like the size of some of my winning trades could be like $2,000, $4,000, $600. The size of my losing trades can be anywhere from like 10 to 20 pips, and then obviously the loss size is going to be dependent on the lot. Like this is like an $800 loss, but it was a 4.5 loss, so it was 20 pips on gold. You know what I mean? But when you look at the overall list of trades, these little trades here that like $5, $13, $50, or if I had a $40 loss, to me those are basically break even trades. You know what I mean? So GJ is reacting right at those previous lows right now. Gold tapping 1820 as well, reacting there. This looks like it's still slowly making its way down. GBP USD. Anybody still holding GU runners? W. If you're still holding GJ or GU runners, let's get some, or gold runners. Let's get some W's in the chat, or a nice like on the stream. You know. And now if we break below 1820 here on gold, we can probably get that 30 pip like impulsive sell down to 16. Euro USD did a quick break and retest here at the key level, but nothing clean on the new hour yet. What's this? Sorry about that. UK new car registrations fell annually by 40%. Well, yeah, not that many people are driving. See, these streams are good. Like I might roast and we might joke around with people, you know what I mean? But at the end of the day, we're still providing value. Oh, sorry, that's the key level alert. At the end of the day, we're still providing value. We're still doing analysis, giving information about the markets, and at the same time, people are making money as well off these streams, you know? Gold pretty much tapping 1816, man. What a melt on this one. Anybody catch that quick 1820 scalp? W's in the chat for gold, baby. It went straight to those lows. This looks like it's gonna fucking destroy these lows right now, man. To me. Dollar still continuing bullish. UCAD, you took the high risk bounce off the low, Aduna. There's the 40 pips, eh? From the low here. Secure some partials. Secure partials, guys. Secure partials risk free. We're reacting right at those previous lows right now. We're having some reactions, all right? So we could get a pullback here. You were buying gold before? Ah, damn, Kushpreet. Dumb as fuck. L in the chat for Kushpreet. Man was on that OG Kush. See how isn't it very, guys? I understand you guys took that W. The analysis was good. Isn't it extremely interesting how like we're getting a reaction right now? Like I'm not saying we're gonna bounce or melt, but isn't it interesting how we came right? We were having such a strong sell-off and we came right down to this previous low right now to get reactions. Like you know how we were talking about gold here? How this low was created, and then you'd have multiple reactions at these lows, and then when you finally break below, a new low gets created. That's what we're watching for now. Now we're just reacting right at that previous low. It's extremely interesting for me to watch. That's why I love the 1 minute time frame. So it did. What the hell? Am I a magician? Did these safer sells just happen? Am I a magician? Did these sells just happen? We didn't retest. We didn't retest 1828 on the dot. We were 5 pips off. That's my fault. But those trade ideas that I typed out to you guys at the start of the webinar, when we patiently waited for them, did they not execute with the confirms we are looking for? That dollar strength, the respect to bearish market structure, right? Let's bring this over here and let's do some reflection now, right? trade ideas. The high risk sell at 1 minute rejections at 1828. Sadly, we were like 5 pips below that, but you know what I mean? Come on. Give me a fucking break sometimes, guys. Right? Those are the safer sells. Watch this range. If you were in, the high risk sells. The safer sells, post pullback, failure to break bear structure. So post pullback, check. Failure to break bear structure, check. Break below 1820, check. And then target 1816. Dollar strength, check. You guys feel me? Round of applause, round of applause. Gold was fucking beautiful. That's the beauty of it. When you do, and okay, now from a mental perspective, for all of you who say, Jeeve, how did you know that was gonna happen? It's not a secret. It's that I repeat this process to my trading every single day, every single week. Just like Kobe Bryant or LeBron do 1,000 free throws at practice their dunks over and over again, their passes. It's repetitive, it's repetition. Anybody can do what I'm doing. I'm not no economic finance master. I'm not like some guy with photographic or some gifted memory. I'm a dumbass just like all you dumbasses. All right? It's from repetition. And the more you repeat things over and over and over again, and you see it play out over and over again, the more confidence you get to execute on them over and over again. Right? So for anybody who's wondering how to do the same, repetition with following these trading principles and practices. Did we just come to the charts and look at gold and start saying, oh, maybe a buy, maybe a sell? No, right? We looked at gold and we did analysis, and then we created some trade ideas, and then we waited for those trade ideas. Right? No high risk buys, by the way. We're breaking 1 minute lows, and we're not coming above 1820. All right. Very nice sells from 1820 and from 1828. These sells are 100. Holy shit. Holy shit. Gold going for that melt. New lows getting created. I like this. I like this. We are going down. We are going down. Yeah, I would like 1800, but maybe that's going to be at New York. We're pretty much reacting at the next key level now. Like this is a higher time frame key level, right? We might not get that till maybe New York. Let's see. These key levels are different, eh? This is only like, look at this. This was before this meltdown. This was 1 pip off, 3 pips off the key level, and look at this. This was what? This was 3 pips away from 1812. These higher time frame key levels are a fucking cheat code. The private chat knows these higher time frame key levels are a cheat code, man. I don't know what the fuck's happening behind the scenes or what I found. I just back tested these levels on like the yearly, quarterly, and monthly, and it works on any pair, any commodity, any currency. You guys see it over and over again. We've been using these gold levels for like a year now. Same levels. The white lines have not changed for a year. Look at this bounce off. Look at this bounce off 1812. This is a fucking 40 pip bounce in 1 minute. Max pissed and GJ. All right, guys. So I'd like to confirm with you guys in the private chat. Can we validate that we called these 150 pip sells? We'll say 100 pip sells. And after the pullback, the break, remember I said we had more confirms once this minor structure breaks and we come below 1820? We'll say 60 pip minimum. So this gold was the feeder today. GJ, can we validate, even though GJ's being a bitch, that we did call ahead of time 143 break and retest sells? We'll say 10, 15 pips, you know? GU still running. GU's 40 pips now, if you guys like near 40 pips. Not trying to be a dick, but I don't know if the other streamers be doing it like this. Todd Capital Group. all he's be doing is buying viewers. Right? I'm fucking starving. I'm getting so hungry. US30 nothing, UCAD nothing, EURUSD nothing. If you guys want to see the analysis on these various pairs that we called ahead of time, you can see where we wrote out these trade ideas and did the analysis at the start of this webinar. Same thing for GJ. Retest KL, then break below sells. Same thing for GU. If you guys want to review, right? Break below 361, break and retest 361. Only buys if we had optimism in a break of structure. Now, for anybody who made money and you feel happy, you got this dopamine hit, you're feeling greedy, don't forget your mental reminders. If you need to go take a quick walk around your house, go stand outside for a second, take a couple of few deep breaths, do whatever you need to do, go jerk off, do whatever you need to do to emotionally neutralize yourself. All right? And watch the markets now from an objective perspective. Don't overtrade, don't over leverage. Patiently wait for your next trading confirms. If you caught 100 pips or 50 pips on GJ, or if you caught 15 or 20 pips on gold, or if you caught the 10, 15 pips on GJ, or if you caught the 30 pips on GU, you're good for today. You don't have to trade anymore for the rest of the day, or tomorrow, or for the rest of the week. Come back next week. Come back another day. Wait for these high probability trades. Remember what I was telling you guys about gold? Remember I was telling you guys about gold? If you patiently, we can play these gold range. Who remembers the last the last stream? You can patiently play, gold fucking melting, man. You can patiently play these intraday ranges, right? But don't forget to set your price alerts. The only reason I didn't take advantage of this is because I'm taking a trading break. But everybody in the private chat knows I would have fucking FMG'd these sells, right? And you guys have seen me take these trades over and over again. But I need to fix my lifestyle first and my shitty diet now before I get back into trading again. But anyways, remember what I was talking about that previous stream, that when we finally have candle closures below this range, that you're going to have that next impulsive sell-off and move, right? Right here to here, this right here from like 1830 to here is already 200 pips. If we go down to this range, 300 pips, 400 pips. And this structure and move can run through New York now. Right? So gold is fucking beautiful today. Gold did exactly what I fucking told you guys. Where I didn't want that full correction. I wanted that impulsive move, a 50% pullback, and then sellers to jump right back in that US dollar strength. If you're still holding your gold runners, man, beautiful job. It did exactly what we wanted. Exactly what we wanted. And yo, look at this. I fucking missed that. Look at this. Look where this 1 minute retest just happened, guys. isn't the lower time frame price action extremely interesting? Remember what this was? This was the previous low. Remember, as we were watching reactions, this was the previous low. We had an impulsive break in retest right at the low, then more sellers jumped right back in. I just missed that. That happened in 1 minute. Obviously, if you didn't get that, it's whatever. I just want to say for the observation of price action, it's very interesting. I'm out of GJ. Fuck that. Mac just closed. GJ's about to melt now. GJ about to melt. 1 minute candle coming straight down now. Mac closed. GJ about to melt. GJ about to melt. GJ about to melt. 20 seconds. 0.800 coming. Let's watch it. Let's watch it happen. Let's watch it happen, guys. This is how the market behaves. Yeah, people say the 1 minute's messy, it's unpredictable, it's too much noise. Man, the 1 minute is the best. I don't know where I don't know what other time frame you can see reactions like this, or you could execute within 1 minute, or execute within 2 minutes. Here you could execute a trade. Here, when you're watching the 1 minute and you saw this pullback, if you had the experience in balls, you're executing on a trade within 1 minute and catching 50 pips profit in 3 minutes. The high risk buys on UCAD you guys took? Anybody take those? These low buys here at the bottom of the zone? Those are the high risk buys. We're still the safer buys, or if we break these 1 minute highs, there's a 40 pip range to the upside. Dollar's still quite bullish. Tonight was great, yo. Tonight was fucking great. We've had some ranging nights. Tonight was great. Besides, if you guys only trade GJ, then you're probably punching the air if you watch GU melt 40 pips, and if you watch gold just melt 100 pips. Max hairline. Oh, you took gold, Mac? Good job, my friend. What's your opinion on the whole focus on 1 to 2 pairs theory? I think it's shit. How can I say this? It depends on the person, right? But I think it is good to focus on 1 to 2 pairs when you first start learning how to trade, just to learn how the markets move and from a psychological perspective of discipline. But as you start to develop your trading and you start to understand some of the concepts that I'm teaching you guys, a lot of these pairs and the flow of liquidity through the markets from a smart money perspective, it moves very similar, right? Like when I was showing you guys the higher time frame structure of AUD USD versus Euro USD, when I was showing you guys the fundamental impacts of these safe haven currencies on these various pairs. So the reason why I trade gold, GJ, GBP USD, Euro USD, and US30 is because one, the structure and concepts of what impacts them are similar, give or take individual impacting economic factors for each country or economic data or any, you know what I mean? Anything like fucking Brexit for GBP or like a trade war for a different country, whatever it may be. Um, Give or take that, there's still a lot of fundamental and universal concepts that can be used across all these pairs. Technically, you can see that these higher time frame key levels, this market structure, how we do market structure analysis, the transaction between buyers and sellers, the lower time frame price action. You guys can see whether it's gold or whether it's a currency pair or whether it's US30. These concepts are universal and they work across the board. And then there's certain fundamental concepts about how money is moving through safe haven currencies, the impact of optimism or fear, right? The impact of these various fundamental catalysts, such as COVID. It's not just going to impact one currency pair, it's going to impact a currency across the board. And you're going to see that flow of money across the board, right? Through the stock markets, through the currency markets, through commodities, through precious metals. So when you first start to learn, it's good to focus on one pair. But as you're developing your trading over months or over years, it is good to start diving into the fundamentals and understanding these various concepts, right? I know some traders don't like to trade fundamentals, they like to trade purely technicals. But at the end of the day, I don't know really like any professional chef who can only cook one dish, or only knows how to, like, you know what I mean? Like, you have to have these different tools in your arsenal and have these weapons available for your disposal, because that's what's going to bring you more confidence and experience with your trade ideas and with your execution, right? Because when you bring it all together, at the end of the day, you can use technicals, but these are financial markets. These are global economies, currencies of global economies. To deny that there's no fundamental impact on the markets or that fundamentals don't matter is absolute retardation, right? Like that's just retardation. So for you to paint a bigger picture for yourself and a more vivid picture by combining the fundamentals and technicals, it's just for yourself. If you want to use just fundamentals and don't even look at the chart, you can trade that way, just trading straight based on data. If you want to trade just technicals, you can do that too. I would rather have as many tools to my disposal that I could use to my advantage, right? And you guys can see over and over again these fundamental concepts and technical concepts, they work. They work from a scalping perspective. You guys have I lost you guys money in any of these streams? Maybe one stream we took a L in any of these streams. Do I ever give you guys poor analysis or tell you guys bad advice or show you guys something that didn't make sense or that was incorrect fundamentally or technically, right? Stream out, and I've only been starting to stream over like the last month or two, right? So you can see that these concepts that I'm showing you guys and sharing, that they work. It's up to you to put them up into application and bring that repetition into place, right? And to develop your skill sets. But yeah, don't forget to like and subscribe. Follow the Capital Hungry Twitter. Follow the Capital Hungry Telegram. It's coming towards a new 30-minute candle. All the Asian markets are closing at 5 a.m. Eastern in new 4-hour candles. And as we're coming towards pre-New York hours, if you guys are trading New York, all the analysis we said is still very valid. GJ Mac made a good decision there. It's the support came right back to 143. Like we were looking at, GU's doing aggressive pullback now as well. EU, we might get that pullback. We're starting to see markets slow down as we're coming towards Asian session close, and we've had some of the stronger moves through London volume already. We also have the UK construction PMI data, and then the Bank of England rate at 7 a.m. Eastern. Okay. Yeah, if you guys enjoy this stream, the best way to support it is by posting it on your social media. Can't even speak anymore, man. Seashells at the seashore. I didn't even do that right. Remember that shit? But the best way you can show your support is by sending a like, subscribing, sharing it around on your social media and to other trading communities. And if you want to learn more, you can always check out all those free resources, the Capital Hungry YouTube, Twitter, and Telegram chat. If you want more than that, and you want to join the paid services for $110 US a month, and get access to like the 50 plus educational webinars, the Capital Hungry news terminal, the Capital Hungry like chats with all the different members sharing analysis, key level price alerts. We do these Zoom sessions every day in the chat. You have price alerts, other members sharing analysis and stuff as well, session reminder alerts. You get access to the newsroom. You get access to the banter chat. Nice sells. You get access to the Capital Hungry main feed where we do intraday analysis, market updates, Zoom sessions more frequently every day. We do this weekly flow, weekly recap sessions, weekly economic events report, a lot of stuff, you know. But those signups are going to be closing. I think we're at like 340 members right now. I'm going to close it at around 350 members or 400 members, just because so it doesn't get too distracting and we can still have a productive environment. But yeah, if you guys made money on gold and secured some positions on your 1820 sales or your 1828 sales, best just to stay out risk free now as we're coming towards pre-New York hours and Asian session close. I'm just going to go quickly make a snack and grab a drink. I'll be back myself at 4:40 a.m. Eastern in 10 minutes. And don't forget that we have the GBP data and then the Bank of England rate during pre-New York hours, okay? And it looks like we're going to get a more aggressive pullback to 143.200. New 30-minute candles in a minute as well. GU was a nice sell. GJ was a nice sell. Gold was the nicest. Gold's like 100 pips if you took the high risk entries, 70 to 80 pips if you took the safe entries, 40 pips if you just took it right down to previous lows. Like bunch of opportunities there. Yeah, the price for Capital Hungry isn't going up anymore. The only reason the price of Capital Hungry went up is because we added more services that also cost money, and because of the value and demand of the service and what other people are charging. When Capital Hungry didn't have a news terminal, or I wasn't as active in it, and I was providing more like just daily analysis, it only used to be $40 to $60. And then I increased it to 60, etc. But then I was like, yo, I really want to make Capital Hungry great, like add more services to it, right? And so then I started doing like this whole weekly recap and weekly flow because I was already doing that myself, right? So then I started doing weekly recap webinars, sending economic data reports, sending political event reports. I paid for this Reuters Icon terminal, which is $25K a year, right? So members can have access to this news terminal. We paid for all the servers and hosting services, and then created these different bots for like these key level price alerts or for these session alert reminders. And then we created like these different trading rooms for like other members to share analysis. We started doing the Zoom sessions every single day. Like, so I was just full-time involved here. So with the increase in all the stuff we added to Capital Hungry and the increase in the amount of value, then I increased the price to $110, but it won't be changing from $110 now. That's like the final price. Yeah, CH is so in demand that people like constantly join just to steal shit, right? So now in CH, you have 50 plus educational webinars you get access to, right? Like when you come here, so you get this introduction manual. First, it just tells you all the chats to join and how to use them and what it is, right? Then it tells you to get access to the webinars and educational webinars, right? How to use the chat and everything. Then you get access to these 50 webinars. There's more now too. We just updated. Everything from fundamental topics, technical topics, psychology concepts, everything. And these webinars aren't on my YouTube, right? So after you get access to the channel and chats, you're supposed to watch all of these webinars and follow this tip section. Watch all the webinars and then watch them again and take notes. After you take those notes, show me those notes that you actually put effort into watching all the educational webinars. Then you watch a few of the different past breakdown videos and Zoom sessions to see how these concepts are applied. You cross-reference everything that I taught to validate the theories taught in the webinars. After all of that, then you become active in the live webinars, breakdowns, weekly recaps, and everything else. Doing all of this over the period of a month or a period of 2 months, I guarantee 1000% you'll be way smarter and have way more knowledge in the markets than you previously did. So that's just the first thing, is to go through all the educational content. Then you get access to this Capital Hungry main feed, where every single week we follow this weekly process of doing our mental reminders. Every single week we start like this. We do our mental reminders and psychology reminders to be in the right mind state, review a in-house psychology webinar, do a fresh weekly recap and a refresher webinar to make sure everybody understood what happened in the previous week, technically and fundamentally. Then we send out an economic calendar and a notable events report of what's going on in the week, a news briefing of what happened over the weekend, political events during the week upcoming, a market sentiment and investor behavior analysis. And then we start doing our intraday market analysis across the main 5 pairs that we look at. After that, we start doing our Zoom sessions through London. Right? So that's just the weekly process. And every single week, we do that. And we've been doing that every week for the last year and a half now. Right? Zoom sessions every single day. You get access to the trade room, where if you don't want to wait and you actively watch the charts, you can wait for GBPJPY at key level alerts, or gold at a key level to take those 1836 sells we were talking about, or GBPCHF. There's session alert reminders when you get tired, just to make sure you know that a session's closing or opening, etc., right? You have other members sharing analysis and information or news headlines or trade ideas as well. Myself updating trade ideas or sharing more information. Then you get access to the Capital Hungry news terminal, which is like faster than any Twitter feed because it's connected right to a news terminal. And then you get access to the banter chat as well. So for 30 days, you roughly pay $3 a day, and you get access to all that content for the 30 days. Within a week or two, if you realize you don't like the service or the setup, or you just don't find value in it, worst case, you end your subscription so that it doesn't auto renew, and you paid $100 for that 30 days, and then worst case, you never have to come back again. But because it's a monthly subscription based business, it gives continuous incentive to me, but mainly it gives freedom to all the members. So it's the members' choice to stay in month after month. You know what I mean? If they want to stay in every month, that's up to them. If they want to leave after a month, come back after a month, stay every single like 3 months, it's all up to them. You know what I mean? So when you see all these other trading communities that have 500 members, 1,000 members, you have to understand those trading communities, they're most likely a one-time payment, right? When you pay a one-time fee, those members never leave that community. They're just going to stay in that chat regardless if they use the service anymore, regardless if they like it. They just stay in that chat or service. It just becomes a big ass shit show chat, right? But Capital Hungry has maintained like 100, 200, 300 subscribers for a year and a half, which is by people's choice. You know what I mean? Every month, members are making that choice. Do I want to stay here or not? Am I finding value here? Am I making money? Am I learning anything? Yeah, okay, I'm going to stay another month. It's not like those services or communities where somebody paid $1,500 and then they just never left that chat. And you just have continuously people getting added to that chat. Here, we've had like 300 consistent subscribers of people who choose to be there month after month. You get what I'm saying? Where a lot of these other communities, they might have more members than us, but it's because it was a one-time fee that people paid. Yeah, gold is given another chance to sell here in the new 30-minute. But I really need to grab a snack. I'm not looking for. I wouldn't be looking for GJ sells just yet because of the economic data, and we could get a pullback. I'd just be sitting on the sidelines right now, as we already took some great trades and did great analysis. I'm just gonna keep it on gold here for now, and watch price action. And I'll be back in 10 minutes. All right, guys. Oh, what's this? Just make sure you check these reactive headlines to the left of your screen here. If you guys enjoy these streams, send a like and subscribe. It really helps the stream get more exposure and be shown on more people's pages. I think that's how the YouTube algo works, is by the likes, comments, and subscriptions. And I'll be back in 10 minutes. I'm starving. I really need a snack and drink here. All right, I'll be back. Yeah, I'll be back in a second. Huh? Yeah. Yeah, well, I want multiple income streams. I like to make money from trading, CH, my other business outside of trading. Yeah, exactly. Thank you, Ozlin. I don't know anybody who would deny an income stream if you could create a business out of a passion you have. I don't know anybody who would deny that. Like, I know Raja makes money from courses, in-person courses, magic keys, trading. Just so many income streams. Like, it's amazing. Ted used to have that mentorship service, broker, trading. He has other like real estate stuff that he does. It's just like money coming in from different angles. Who would deny that if you could set that up for yourself, right? Yeah. I don't know anybody that would deny an income stream or more money coming in, especially from something they enjoy doing. right? I want Capital Hungry to make me 100K a month, and I also want to make 100K a month from trading, and I also want to make 100K a month from businesses outside of trading, maybe $1 million a month. How do you guys know that I don't want to grow Capital Hungry to be a movement and have other people as knowledgeable as me, and then Capital Hungry ends up being the new IML, but proper knowledge, and you end up having 10,000 members and people that I can pay to run it down the line? I don't know. Or maybe next year Capital Hungry will be shut down and destroyed. That's the beauty of life. But if you don't put yourself in those situations, those opportunities will never even exist for you. For me, I have one or the other. Capital Hungry, I could keep maintaining it as is. I could grow it. I could try to expand it. I could shut it down. Those opportunities exist for me, and those choices exist for me. Where somebody who's not doing anything, they don't have no opportunity to do anything, right? So if I can make $100,000 a month from Capital Hungry, I'm not going to deny that. If I can make more money from trading a month as I grow, I'm not going to deny that. If I can make money from Capital Hungry and from trading, and then take that money and put it into another aspect of life to create another income stream, like Roger says, hey Jeev, fuck it, I want to do Magic Key, I want you to partner up with me on this thing. I'm not going to deny that. I'm going to take that risk and take that opportunity and execute, right? So for people who are saying like, oh, you make X amount of dollars from trading, or you make X amount of dollars from CH, or you made X amount of dollars while you were working at the bank, or why did you still? People used to ask me, why did you still work at the bank when you were making money trading or from CH? Are you demo? And I was like, what the fuck was that? Why? Because I worked from home and was getting a free paycheck. How is it demo that I wanted to keep another income stream that was easy? You get what I'm saying? People were so confused last year when I was still working my bank job, but I was working from home on the computer as I was looking at the charts and stuff. Like that was my bank job, was so comfortable and so like mundane, such repetitive tasks technically on the computer, that as I'm doing analysis, I'd be doing that bank job. And that bank job, it's not paying me as much as trading. It's not paying me as much as CH. It's not paying me as much as the business, like the furniture business, decreased with COVID. But it was still another $4,000 a month coming in for me just sitting there on a computer. Why the fuck would I deny that if I have the time and energy to do it? You get what I'm saying? People thought because I still work my bank career as I'm working from home that I was a demo trader, or that Capital Hungry was a scam just because I still chose to work my full-time career. And now that I left my full-time career, people are like, oh, he's making so much from CH and from fucking trading, thinks he's the shit. No, I'm just making a decision to free up that time, because that monetary money, 4K coming in, wasn't worth the potential opportunities of me putting my time and effort into CH or into something else. Right? So yeah, I want to make a lot more money than what I'm earning now, because my financial freedom goals are like to help my family and friends around me, not just me. And that takes a lot of money. That's not something that can be done with 10K a month, 30K a month, 50K a month, you know? So for anybody that says like, oh, he's doing this, he makes money, he's doing that, he makes money. Oh, how come he's doing that to make money too? Like, it's like, what the fuck? What, would you not do the same thing? And I don't know any person where if you told them, hey, I got an idea. Like Roger came up with the ideas himself for market fluidity, for like whatever Magic Keys with the other person, for the Dominion markets, for the streams. Those are his ideas that he executed on. If I came to someone else and said, "Hey, do you have a passion for doing analysis? What if I told you you could create a business out of this? It's going to start slow. You're only going to have 10, 50 members at the start. You're not going to be able to charge as much as you did, but by the end, you could be making X amount of extra dollars." You think they're going to say no? No, but they just don't have those ideas themselves. And usually, when people do have ideas, they're too scared to execute on it. Whether it's self doubt, whether it's fear of judgment from friends or family, whether it's society pressure, I don't know. I don't have that fear of execution. You know what I mean? But if you do have that fear, then it's not like something's wrong with you, but you should actively work to try to remove that fear or try to become stronger than that so you could push yourself. Because at the end of the day, we don't know what we're doing here on this earth or on this journey. Not one human does. And it's not about chasing money, in my opinion. It's about chasing accomplishments. It's about you putting the time and effort to develop yourself, to develop the skill set, and to chase accomplishment, right? Yeah, Jocko, the military guy. So it's not about me chasing the money. Capital hungry is something that I created, and when people say capital hungry makes you money now, or when people say, "Oh, Jeeve, yeah, Jeeve, you made $5,000 on gold, but you're using a 10 lot. Like you couldn't do that if you used a penny lot." Everybody forgets at one point I was trading penny lots and sharing that. Everybody forgets at one point Capital Hungry had 20 members. Then it had 40 members. Then it had 50 members, 100, 200, right? But that growth wouldn't have come for Capital Hungry or in my trading without me actively applying myself day in and day out and executing, right? Nobody said shit about Capital Hungry when it had 30 members. Nobody said shit about the money I was making when I was trading penny lots. You know? Everybody always comes after they see you reach some point of what they think success is in their head. So when people see that maybe making 10K a month is successful, then they see that and go, "Oh fuck, how the fuck is he doing that? So lucky." So lucky, man. There's no luck behind it at all, right? Damn, that's smart, Darren. Sure, sure. Let's check this out. We're the stream's gonna be coming to an end soon, anyways. Like as we're coming towards 5 a.m., I'm just gonna end it now soon, anyways. So we're just gonna call it a night. Let me check this chart out first. It was a good night. We did some great technical and fundamental analysis across pairs. We mapped out great trade ideas. We looked at our economic headlines. We didn't have too many economic headlines. We were observing any economic data reports as well as movement through our safe haven currencies. You guys can always re-watch these webinars to see the trade ideas and everything that was given ahead of time. Before we go, let's just look at this chart. GBP USD 361 area. If we get a retest, only thing I'd be a little bit iffy about is the new 4 hour candle. If the new 4 hour candle can push up first and not break above this zone you have labeled out and not break that bearish market structure, then these sells down will make sense through New York. But you have to be cautious that the next hour and a half, pretty much, or 2 hours, we have the Bank of England interest rate. So with the interest rate itself, we could see a bit of a whipsaw in price as liquidity gets grabbed and traders get taken out during this volatile time, and then we'll see the decision. Then we'll see price move in the direction based on the sentiment they give during Bank of England interest rate. Okay. I think they're going to be fairly neutral. They're going to talk about what they're doing is good. There's still room for more economic stimulus. Downside risks of COVID remain. They're looking to handle the potential various variants, but there's no modeling data for that, et cetera, et cetera. Right? I think they're going to have a fairly neutral stance. All right, everybody. Thank you guys. I appreciate you guys coming here. Zoom chat. Make sure you guys rewatch this webinar. I'll see everybody later. It's 5 a.m. Eastern now. Great session. Make sure you like and subscribe. No problem, everybody. Enjoy.